All right, there we go. Should be live now. Everything looks like it's working. Okay, great. Sorry about the slight delay there. There we got everything. Some minor technical difficulties. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:15 on 10/27/2021 Eastern Standard Time. Before we get started, I'd like to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's go ahead and get it started. Before we do, obviously, we all know that Shiba Inu, aka the SHIB or Shiba Nasty, has been absolutely going parabolic the last week, but especially the last couple days. I would like to remind everyone, while myself and many of the group members have capitalized on this parabolic move to the upside, that Shiba Inu, aka Shiba Nasty, aka Pound Pay Me in SHIB, is a total shitcoin. It is total garbage, absolute crap. The circulating supply is roughly 400 trillion. Therefore, in order to reach the goal of 1 penny that everyone is talking about per Shiba Nasty, that would actually be a, let's see, what is that? $4 trillion market cap. So it would literally have to be roughly twice the size of the entire crypto market cap currently, and roughly 4 times the size of Bitcoin alone. And while I did see a random parabolic move on Coinbase today, up to about a bunch of zeros and then a 1, it did cause some outages, some issues with Coinbase. Did reach the number 9 spot, officially dethroning the lesser and weaker version of itself, Dogecoin, and also stablecoin as well. So next it is going to dethrone, there's a couple of coins with like 30, I can't even think of the, what is it, $30 billion market caps. So it is not that far away from moving on up. And the truth is, just about every other crypto and also the majority of the stock market took a hit today as well. We saw double-digit losses in most cryptos. Some were slightly less. And obviously, based on the parabolic move in Dogecoin, I'm sorry, what was I thinking? The parabolic move in Shiba Nasty, basically just ate the other cryptos' lunch. We obviously saw outflows from all the other trash coins and into the number 1 king trash coin, Shiba Nasty. And to tell you the truth, it is obviously, well, not obviously, but it is trading extremely technically. It has been following our fib targets the entire way up. We have obviously some Fibonacci extensions from our previous little high to low period, and then also from our Coinbase debut all-time high down to our consolidation low. And we have just surpassed the 2.618 Fibonacci extension from the initial low to high. And then, or I'm sorry, high to low on the consolidation. And then we also have just taken out the 886 finally, and then basically all but double topped at this point in time, right at the 1 level. And when I say 1 level, I mean multiple zeros and then a 1, obviously. So 3 to be exact. So fraction of a penny. But yeah, let's jump into it. And we will take a look at the rest of our assets today, and then we can get it rolling. What's up, Jason? Good to see you, my man. Welcome, welcome. So let's go ahead and start with the 10-year. As expected, the 10-year is pulling back. We do expect it to chop around in this area, as we've essentially been discussing. We basically reached our exact tops here from this little consolidation move. We have a couple little outlier candles here from the top, of our initial move up here. And then obviously we have our support area right around the bottom here. And then we're just kind of shopping through it. One thing I have been paying attention to is essentially we have formed what amounts to a ascending broadening wedge. We are in a pattern with an upward trajectory. It has been slowly getting wider and wider as we bounce. We have multiple touches on the bottom and multiple touches on the top. We reach the blue resistance of our cup and handle pattern. And basically we're just chewing through all the sell orders before the eventual break and move up. So once again, trading extremely technically. And now a break of the ascending broadening wedge is typically going to lead to a measured move to the downside of roughly the width of the pattern. So now we have officially closed outside of the pattern. We would expect a slight extension to the downside, which is going to take us back roughly to our 618 in yellow right here. So somewhere around like that 1.45 level. So what does this mean for the actual markets? Well, this is obviously going to trade inversely to the bond market. So we would expect obviously bonds to go up, treasury bonds to go to the upside. And then also this is going to alleviate some of the pressure on our precious metals and also on some of the more speculative assets or like stocks, for instance. Like typically this will trade inversely to the tech sector. So a little sell-off in this should allow tech to move to the upside, should allow precious metals to move to the upside, and overall alleviate some of the fears in the market. So, obviously we are seeing that. We are still on top of the 200 exponential and simple. We are getting the divergence signal at the top of the range. While we left technically the bullish control range, we did get the sell by sell, which typically is indicative of a top. And then we also saw once again some bearish divergence between these 2 points here as we put in a high there and a lower high here. And then we put in a high here and lower high here as well. But on price action, we put in a high and then a higher high, which is typically just going to tell us that this is an unsustainable trend. And while we may see longer term continuation to the upside, we are overdue for a short term pullback, which we are currently seeing. So the next step is to see, as long as we continue to stay below that 1566 level, we would see like the 8 and 21, the two green moving averages on the TJD master cross to the downside and then enter into a little bit longer of a consolidation or sell-off. A breakdown from the current level that we're at right here. Obviously, we have quite a bit of support here. A breakdown from that level, very likely to take us down to our next support level, which is going to line up perfectly with the 200 simple moving average. And then eventually, if we get down there in the 200 exponential moving average, it's going to line up at the top of the ascending triangle that we broke up from. If we do start to break down below that level, that's when we'll start to think there's a possibility that we could go into a longer continuation sell-off or retracement and possibly have to change at least our short to medium term view. So, but as of now, looks exactly like what we were expecting. Expect some more continuation, either sideways or to the downside at this point in time. And again, we know what that's going to do to our other assets and markets as well. Looking at the TLT, 20-year Treasury bond, we see obviously what that has amounted to was we had lost the 200 exponential and simple. We saw a little gap up here trying to reclaim the 200 exponential and simple. The 200 exponential has flipped back to the upside. So if we do see continuation or even just consolidation at or above this level, we could potentially see the 200 exponential and simple roll back over to the upside and then the bond market actually to continue to strengthen. Now what we see here is on the knife and that gap up, we do see that the knife has gone to an extremely high level. While the knife does not have any limits, it can continue to go up forever. It's not limited to just like the 100 level. Typically, once we get up around these levels is where we start to see the energy declining and starting to like top out. We also see obviously a little W pattern and then the breakout and measure move of the W would take us back to our little consolidation pattern from previously. So. And then, we are seeing a little bit of strengthening here. We did get the hard buy signal coming out of the bearish control zone and essentially what amounts to like a double bottom or a inverted head and shoulders pattern. So not unrealistic to think that we would get at least a short to midterm move back to the upside. So, and again, this could be aligning with shorter term to medium term, like a safety play. as people want to sort of get out of the more speculative investments that they have and put their money somewhere safer, like the bond market. What does this also tell us? In my opinion, if people are smart money the bond market is always referred to as smart money or institutional money, since the beginning of bond markets and essentially time. So assuming that that is still true and that, the SHIB traders and, regular old people trading on Robinhood and all the other free exchanges out there, assuming they're not the smart money now, assuming this is still the smart money, the market makers, the market movers, etc., what would that tell us? Well, it tells us that the bond market is not anticipating inflation or sustained inflation the same way that the other markets are. Why do I say that? That doesn't make any sense. Well, if we know that currently the inflation rate in the United States is, roughly anywhere from, let's just say 4%, 3%. Let's say 3%, just to be safe. If the inflation rate in the United States is confirmed at 3% and could go as high as, depending if you're using shadow stats or looking at whatever you want to, let's say it's between 3 and 15% right now, inflation on an annualized basis. No smart person in the entire world, no one would ever in a million years lock up their money in a U.S. Treasury bond, no matter how safe it is, for a 20 plus year period for less than that rate of inflation. And so if we say the absolute minimum, we say it's 3%. If that 3% was going to persist over the next 20 plus years or whatever, you would be getting a negative real rate, as the inflation rate would be 3% per year, roughly, and the rate on the actual bond itself would be, what amounts to, let's say 2%, just a nice even number. So you'd be losing 1% per year. So not realistic to think that smart money is going to take that deal. If I told you that, I will loan you, $1 million, and then, I'll get back less than that $1 million in the end, why would I loan you that money if I'm losing money on it? If I give you $1 million for, 30 years and you pay me back 1% less every year, when it's all said and done without compounding interest or whatever, roughly you're going to pay me back something like 700,000, 600,000, somewhere around there if you compound it. So I'm not going to loan you $1 million with the promise that 30 years from now, you're going to pay me back 700 or 600,000. Doesn't make any sense. I would literally just take that money and do something else with it, or do nothing with it, or light it on fire just to be spiteful. But that tells us essentially that the bond market or the smart money does not agree that this inflation is going to persist. So what does that tell us? Well, it tells us either inflation is going to go down or the bond market is going to crash and the rates of those bonds are going to go up. So one way or another, the bond market sees something that other people are not seeing currently, in my opinion, of course. The VIX, obviously down at that same level again. We did slightly take out that previous little push down low, I think we essentially took it out just barely here. We still have a little ways to go to reach the bottom of our descending channel, and we're still in the neutral zone between our middle zone of the larger sideways channel and our bottom of the channel, which is where we would get extremely bullish on volatility. So in this case, I'd say we're at the lower range of our volatility levels. Nothing crazy to see here. We did see a small spike here, but as long as we're below like that 19 or 20 range, and as long as we're above what amounts to like 10.5, there's no crazy move. We're not going to see any market tops or market bottoms or anything like that, but we may see some shorter to medium term volatility, which we did see today, as most of the stock market had some volatility and gave back a little bit, some more than others. So far, the earnings season numbers have been pretty good on what has reported so far, including some of the ones that people were a little more speculative about or a little more negative about. But overall, been looking good. So let's go to U.S. oil next. WTI crude. So as we've been discussing, we were expecting and planning for a temporary short to medium term pullback right here. We are in fact seeing that pullback from our breakout above our green level right here at 77. We came back down, retested it as support, had a pretty aggressive candle get bought up, and then we saw continuation. So it would not be unrealistic to think that we're going to come down here somewhere in the low 80s to, I would say, mid to high 70s as we retest this level as support and then see continuation to the upside. I do think we're going to get continuation to the upside. I do not think we are going to get back down into the 60s anytime soon. But we do know once again that this trend was unsustainable as we were starting to see some bearish divergence developing. We are now getting the hard sell signal coming out of the bearish control zone. And again, we have seen multiple red histograms in a row on the daily. So, we have been expecting this. I am still extremely bullish on oil overall until basically something changes with OPEC or the overall situation. So, and while I don't perceive that happening in any time in the near future, I don't see any kind of serious changes taking place in oil. So, but we'll see. We have, we do have the 618 level right here, which is like the 6650. And then obviously once we broke out of this green resistance right here, that amounted to basically our double bottoming pattern. Man, this chart is such a pain to deal with. Let me switch to the monthly, go a little over here, put it on auto, switch back. So we'll see we essentially had what amounted to an Eve bottom right here, and then the pointy or sharp atom bottom here. And then our neckline is here at the 236 in green, which is where we're currently running into a little bit of resistance. We did get slightly above it, but I don't think it's unrealistic to think we would come back to it, retest it as support, and then see our move to the upside. And in this case, the blue arrow is our measured move from the bottom of the Eve to the neckline break of the pattern, and that is our current trade setup, which is a 58% move to the upside, and essentially the retest of our peaks from back here in 2011 and 2013, and that's going to take us up to about $116. We do have the 786 right here at 95, call it 100. So, next target, obviously, after we blew through 60s was 80s, and then after the 80s was our 95, call it the 100, and then after that, right back here at like 116, 117, and then we're just a little nudge away from all-time highs, which would put us at roughly 150. At this point in time, with the strength that we're seeing and the overall situations, I don't think it's unrealistic to think that we will be putting in new all-time highs on oil. We're still a little ways away, price action wise. So, I don't want to get too presumptuous, but unless something changes in the near future, and I don't see anything in particular changing, I think it's probably realistic to assume that we will in fact be putting in new all-time highs on the oils. Just taking a look back here though, while we do have this oil chart up, I had mentioned it a couple times in the past, and I just want to take a look at what we're seeing and how that might be corresponding to some previous events of the past. So we will notice here, obviously, in 1985, we saw a massive dump on oil. We will see a pretty strong dump right here in the 90s. We will see once again a short-term peak around here in October of 2000. And then if we just fast forward here again, we will see a peak here in 2008. Saw a pretty aggressive sell-off in 2014, and then once again in 2018, and then obviously our COVID dump took us down pretty low as well. So what I want to point out here though is that a couple of these key peaks here along the way just so happens to line up with some important events that took place. So obviously, the 1980s back here, what did we see happen? Well, we saw obviously runaway inflation. We saw Paul Volcker hike rates up to 15, 16%. And then obviously that corresponded in what amounted to a crash in oil. Before that, it wasn't going absolutely parabolic, but it essentially was when you consider where it's coming from. So that was a very important top right there with runaway inflation taking place. So, and then if we just fast forward a little bit here to 2000, what did we see in 2000? Well, we saw the tech bubble burst. And then once again, oil going from $40 a barrel, $41 a barrel, to like $16 a barrel. So getting cut roughly in half or slightly more than that. And then again here, we saw the all-time high in oil was in 2008. That was our mortgage crisis. Once again, we had just absolute parabolic movements in the market. Came to the all-time high peak at about 145. And then we saw a crash down here to like $34, $35. So in this case, oil lost like 75% of its value after going parabolic. So what does that tell us currently? Well, we obviously saw the crash right here with the economy crashing, with the rate hikes from Jay Powell leading up to this, and then obviously the COVID dump as well. So what does that tell me right here? Well, if oil continues to go parabolic, and especially if it gets back up here to the highs, of 2011 or 2013, or potentially even the all-time high of 2008, what does that tell me? Well, it basically tells me that we're probably going to see a crash sometime, and again, this is a monthly chart, so could be within a couple months, could be within the same year, etc. But on the monthly chart, a margin of error of a couple months is not that big of a deal. So realistically, if we do see this continuation, if we do see this spike to the upside, potentially to new all-time highs, I think it would be very realistic to think, say we burst up here and got as high as like 150 or something crazy. Maybe we got up to 200 or, the 1.236 Fibonacci extension. Maybe we made it to like 240. And then after that, we saw a massive crash. If we get up here to like 200 or 240 or even, 150 and retest the previous all-time highs, what would that crash amount to? Well, if we go back from 150 back down to like 72 and retest the breakout of the head and shoulders after completing the measured move, and then find support there, we could easily see continuation in a world where, oil trades for years, months, decades, above $75 and does not come back down. Why does that make sense when looking at like the macro of oil? Well, we basically stopped investing in oil, with the exception of the fracking little boom that took place. We basically quit investing in oil, stopped putting capital back into oil, started paying capital back to shareholders in the form of, dividends. And when you stop investing in something before it's time to stop using that something, you can expect, as long as demand continues or rises, that the prices would rise as well, as there's limited supply that can no longer fill the demand at the existing prices, which causes upward pressure on the prices or tailwinds that skyrocket them to the future. So again, while I do believe in a future with sustainable energy and EVs and all this great stuff, a nice green future where everything is clean and renewable and great, it is unrealistic to think that that is going to be happening anytime in the near future. And while oil is essentially, the cost of doing business, as I like to refer to it, or the lifeblood of the economy all around the world, it's not unrealistic to think that until we find something to replace that blood, or until we find something else that takes its place, as essentially the cost of doing business through like, nuclear fission or fusion, nuclear power, sustainable energy, whatever it ends up being, combination of those things, it's not realistic to think that oil is just going to go away. So as long as the energy portion of the economy or the economy itself is going to continue functioning around the world, I think oil prices will continue to go up. So now, is it possible we get hit by a meteor, or, the World War III shows up and, we end up in a situation like post-apocalyptic situation where there's no more oil, or an EMP blows up, or the sun unleashes some crazy event that fries all our microchips and we no longer need oil? Sure, it's definitely a possibility. But I put the possibility of that happening at as close to zero as possible. Therefore, I'm going to bet my other 99.9% chance that this is in fact how things are going to play out. So once we do see that massive spike on oil, which you could argue is already taking place now, could the top already be in? Sure, it's possible. I don't think that's realistic. But the fact of the matter is, we're going basically parabolic at this point in time. So if we're going to see a blow off top type scenario, I do think that we will probably see it from that 115, 150, or potentially up here in like the 200s and all-time highs. And that will typically or most likely line up with the topping in the economy, or, in this case, the world economy, not just the United States. So Just a little broader of a picture there on oil. We are still very strong up here inside the bullish control zone. A bunch of green histograms, positive slope. We have regained the 200 simple and exponential moving average. We are obviously have the 8 and 21 cross to the upside. The only thing we are waiting on at this point in time is overtime for the 200 exponential to get back above the 200 simple and to, basically a situation like this. We come up here, we come back down, retest those levels, make sure that we are confirming the 200 cross above the 200 exponential above the 200 simple, and then we see continuation as the trend goes parabolic after that. So, and again, we see this was like 2000. So if this was the 2000 cross goes parabolic right here, we see that the 200 exponential is about to cross above the 200 simple. We see the crash tech bubble burst. We come all the way back down. We retest the 200 exponential and simple, crossing them back over once we find support here. And then we continue on a parabolic run over what amounts to like the next 8 or 10 years. And then finally the housing market crash brings us back down, reversion to the mean at the 200 exponential and simple. And then from 2008 until, basically this year for the next 13 years, we basically just went sideways to down. And now here we are in that similar situation as well. So is it possible that we go parabolic here for the next couple of years, potentially even go as high as taking out that previous all-time high, and then we see that burst, come back down. Around then, the 200 exponential is right about to cross over the 200 simple. We get a similar situation like this, where we retest the 200 exponential and simple, revert to the mean, find support there, and then see that continuation take place. Well, I think there's very high likelihood of that happening, as that is typically what happens every time. And once again here, if we go back to the late 80s, we see the breakdown here. We consolidate, and then eventually 200 exponential crosses over 200 simple, and then we see the continuation to the upside. So we'll see what happens. I think there is a high likelihood of that taking place. Of course, there is no 100% in these markets. Anything can happen. There's always a possibility that I'm wrong about this, but looking at what's previously happened and what's likely to happen gives us a higher probability of success than just guessing up or down. So. But yeah, that's it. A little deep dive on oil. Let's jump into our traditional markets here. Dow Jones obviously had some serious pressure come in. We saw a little bit of weakness yesterday, and then we saw a very aggressive selling candle come in today. Only really amounts to like less than 1% down, from the all-time high. And what does that really do? Well, it's just a breakout above the previous all-time high resistance, so far acting as support. It is a retest of the 8 moving average. We are seeing a little bit of weakness coming out of the bullish control zone. But as we discussed, we were at unsustainable levels here, 97.5 out of 100. So, we need to cool back off for a little bit. We do need to pay attention to the fact that the 200 simple is above the 200 exponential. So we are showing some weakness in the trend currently. But overall, the markets still look strong, especially at all-time highs. So. S&P doing the same thing, broke above the previous all-time high, coming back down, retesting it as support. Could see some slight continuation down here. We are once again coming off of a 98.5 level, so we know that this trend is unsustainable as we're basically maxed out, on buying power. So it's not unrealistic to think we would come back down, find some support, and then see that continuation to the upside. IXIC, Nasdaq. Basically has double topped here, was unable to get a daily close at or above the previous all-time high. We basically just topped out at that same level once again. Is it unrealistic to think we come back down here and retest some of these previous little areas where we saw some resistance or some sideways chop as support before we get continuation to the upside? Looks likely. I think honestly that tech is basically just going to do whatever the other indexes, the Dow and the S&P do, with some slight variances based on rates. As overall, the tech valuations are much higher in comparison. The overall tech space has ridiculous valuations. So it's going to be a little more heavily influenced by the rates. All right, so then we have the Russell next. The Russell was able to take out that previous high. Unfortunately, it did not make it up much higher. Did not quite get up to the top of the range, but overall has just been trading sideways now for what amounts to the entire last year. So what does this tell us? Well, it tells us overall that the small businesses and I say small businesses, but in all actuality, we're talking about the smaller of the businesses that are publicly traded in the top 2,000 stocks, in the on the publicly traded stock market in the United States. So what does that tell us? Well, it tells us that the larger businesses, especially tech sector, are still strong as they're putting in, well, yeah, I mean, they're essentially putting in all-time highs because we see the Dow Jones, we see the S&P, we see the Nasdaq, all basically making all-time highs consistently and running to the upside. And then here we see the smaller businesses of the publicly traded companies basically just going sideways. So we can tell that the small to medium businesses that are publicly traded, the overall health of them and strength of them is much, much weaker. And then we know for a fact, as you can just drive around whatever city you live in or, whatever, and you can see that the actual small businesses, many of them have closed down. If you don't leave your house because you're afraid of the big bad boogie bug, you can just go on YouTube and just look at people walking around in their cities. And, you will obviously see record amounts of closures or, mall closures or small business closures or whatever. So you don't have to actually leave your house if you're afraid to do that. You can find whatever you need on the internet. So, but I suspect that the majority of my viewers fall into the camp that is not afraid of the boogie bug. But maybe you have a government that locks you down. But, all reality, what does this tell us? If it just continues to go sideways, it's going to just continue to go sideways. Obviously, we see that breakdown has taken us right back down to the 200 simple and roughly the heart line. We also had the breakout here of the of our flag or neutral triangle right here. We got the breakout. We come back down. We retest the heart line in the breakout in the 200 simple. If that holds, I would expect us to continue back to the upside. If it breaks back down, I would expect us to continue back to the downside. But again, I think we will continue to just trade inside this range, continue to just trade in the range, trade in the range, trade in the range. But if we just extend this support line over a little more, we'll see that our initial touch down here was at the bottom in between the 200 exponential and simple. Then we had another touch. Nice little set of touches here. We got our technical breakout of the resistance triangle. And now here we are back down at that support again. So while I think it's definitely a possibility that we could come down, depending how you want to look at this, we could easily come down a little lower. But I would expect us to find some at least temporary support around this range where we're at now or slightly lower. And then potentially continuation back to the top. But I do not foresee a breakout of this range anytime soon. Nothing telling me that anything is going to change with our small to medium publicly traded companies. So next we have our Xlb Material sector. We did get a technical breakout of the descending triangle. We know that this is a bearish pattern and tends to favor the downside 66% of the time. But with our 34% chance, we have broken out to the upside. We have now come back down and we are retesting the breakout as support. Assuming this area holds, we would expect to see continuation to the upside, probably somewhere near our previous all-time highs up here at like 89, or maybe as high as 100, as it's a nice round number. And in the event that this does not hold and we essentially get a failed breakout or throw over, I would expect us to come back down not only to the 200 exponential and simple, but to the lower end of the range, which we have acted as support here 1, 2, 3, and then probably a fourth time down here, roughly at like 79. So as far as I'm concerned right now, you could argue that this is a technical breakout. I do, however, like to see a breakout, retest of the breakout, and then some continuation if I'm going to trade a breakout to the upside. Otherwise, I would expect it to just break down here, fail to act as support, and then see continuation back to the bottom of the range. But once again, I do suspect we will continue to trade inside of our pattern, obviously until the one time that we don't. And typically these patterns will play out somewhere between like 65 to 85% of the way before a breakout. So if we just kind of zoom out here, it's not unrealistic to think we chop down here again at the bottom, the top, and then somewhere around, early 2022, we make a decision as to if we're going to break to the upside bullishly or to the downside bearishly, which, I expect that we would see pretty big continuation in the direction of the breakout once it is confirmed. But again, if we look at the levels here and just look for correspondence or what this is telling us, we can see here we got to elevated levels in the bullish control zone. We got the hard sell, and then we broke all the way down to the bottom of the range. We got the hard buy around the bottom of the range, saw a move back up to the top of the range. We got the hard sell in the bullish control zone at the top of the range, came all the way down to the bottom of the range. We got the hard buy at the bottom of the range, moved all the way back up to the top of the range, and now here we are in the bullish control zone with the blue stochastic angled back to the downside, preparing to leave the bullish control zone if we do not see continuation to the upside, and more than likely we would get the hard sell signal and then move back down to the bottom of the range. So we can see that obviously our momentum, our technicals, our pattern, everything is lining up, telling us that more likely than not we will see this break back down and continue trading inside of the triangle pattern. And that is our material sector. Next we have the Xlc Communication. Again, communication showing some weakness here, while overall it's been doing nice and has a nice stop up here at 86. We are currently trading at about 79, still on our way down to retest the 200 simple and exponential. We see the 200 simple has crossed above the 200 exponential. We see the blue stochastic is rolling over, and we see a rejection off of the red slope line and zero level of the TJD TDMACD. So what is that telling us? Well, more likely than not, we're going to come back down here, retest this little low from a couple weeks ago, and then probably tag one of the 200 exponential or simple moving averages before seeing another move back to the upside. But again, I don't think this thing is ready to make a strong move in one direction or the other. XLY, consumer discretionary. So we have been obviously trading inside of this ascending wedge, just getting tighter and tighter and tighter as we creep to the upside. We broke above our key resistance here in blue at 180, retested it on multiple occasions. We obviously had that as our buy zone target, and then we came back up to the top of the range, got the technical break. From that break, we had a small pullback, but now we are seeing that continuation we expect. And our target to the upside has and still is right up here, just over 200 and about 204 roughly, let's say. And that is just the measure move of the ascending wedge itself. We're seeing that play out. While we are seeing some temporary topping looking candles right here, until we see either a gap down and continuation or a big red candle that takes out at least 50% of the body of our candle right here on October 25th, this doesn't look like a topping pattern to me necessarily. It looks like the beginning of a topping pattern. Typically we'll see one large green candle. We will see like short body and long wick rejection from the upside, and then we'll see at least 50% of that previous candle get taken out. That shows weakness to me, and essentially will typically result in at least a short-term top. So until we see at least one more candle come in, one big red candle, or one gap down with failure to close the gap and hold that support level, I would say it's not quite a topping pattern, but we have all but completed the measure move to the upside. So it's not unrealistic to think that if we see continued weakness in the markets and in the consumer, that we could actually see this pull back down here. So, and there's a lot of arguments. The consumer is strong. There's record amounts of trillions of dollars in people's bank accounts, and spending is going through the roof and all this stuff. But there's so many metrics to take into account. Who has all these trillions of dollars in their bank account? Because I know typically the people that need money don't have money, and the people that don't need money do. I also know that banks are trying to give out loans like crazy. You're seeing all those zero credit card offers. You're seeing offers for like free money left and right. Well, some people are seeing that. Like I'm seeing a lot of that, but I also don't need to borrow any money. So they're trying to give money to the people who don't need it. But on the opposite end, you're seeing a lot of people struggling, having to pay back their mortgages or rents that they have backlogs of 1 or more years at this point in time. Those people probably would love to have some zero interest rate money, with no interest until 2023 or whatever. So the people that don't need money right now are getting the offers for all this money. The people that do obviously have been getting help. I'm not saying that they're helpless, but they don't need the help in the same way. So I think what that amounts to is, the people that are probably not in the stock market or not homeowners or, don't have the ability to access a bunch of free money, those people would probably love to have this money, and they're probably weak consumers, as where, the people with the trillions in their bank accounts and, nice stock and crypto portfolios, the ones that are getting all the free offers for money and have no debt or no need for any more of this free money, those are the people that are getting it offered to them. Those are the people that we're seeing, with their purchases going through the roof. The other people are the ones that we're seeing purchases are going up, but they're going up on their credit cards, as most of these government programs have been cut off. So there's a lot of external factors on each one of these sectors, and remember that you can use statistics to basically paint a picture, but you could be painting a picture of a pile of shit because you're full of it. So please keep that in mind as the mainstream media pushes their agenda. XLE energy sector. So obviously the energy sector is looking strong. Took out this little technical top here. We are what amounts to seeing exactly what we discussed play out. We have put in the 3 top back here as discussed. We saw the pullback back down to the 200 exponential and simple. We put in an inverted head and shoulders pattern. We saw the head and shoulders break to the upside. We got our measure move back to the previous high, and now we're seeing continuation. We have broke out above that level. We are seeing some temporary resistance off of our monthly 200 exponential moving average. The consolidation or the pullback was our 4 retracement back to the top of the 1, and now we're seeing that break through the 200 exponential. We have flipped the slope back over on the 200 exponential, and our next short-term target to the upside after this consolidation is roughly $64, as that is going to be a retest of the 200 simple. Assuming that we consolidate in between the 200 exponential and simple, I think that will be our trading range in the near future, basically between 55 and 65. That could last for the next few months, or potentially less or slightly more, but we are inside the bullish control zone. We do see a blue slope line here. We do see strong green histograms to the upside and across over the 0 line, and I think I don't think it's unrealistic to think that we get up here to the 786 at like 73 or 74, and that somewhere in between there and the 886 at like 85, we put in the 5 or the top of this initial pattern, at which point in time I think we would retrace all the way from the bottom to the top. But keep in mind that this is overall our weakest sector, as we put in the high in energy back in 2014. And then we put in obviously the low with the CVD dump back in March, as the entire world turned off temporarily. So now we're just basically putting in a bullish retracement inside of an overall bearish pattern. So while this looks extremely bullish, until we take out that previous all-time high and see some form of continuation, it is important to note that this is like literally the one and only sector that is not putting in all-time highs. And then obviously, if we just kind of look back a little further, what was the all-time high in the energy sector previously, before that 2014 all-time high? Well, this was our 2008, crisis crash, obviously. And then once again, if we just go back here and look at the previous peak, just like we did with oil, this was our 2000 crash. So if this was what 2000 looked like, and then we had a nice run up, and then this is what 2008 looks like, and then we had a nice run up, and then this was our 2014, and this was our CVD dump right here. Well, if we see another parabolic move like this to the upside, we can expect that once again, when this tops out, once this 5 is put in and we see this continuation finish off, whether it's at the 786, the 886, a double top, new all-time highs, whatever we see, this energy sector is going to tell us when the market top is in. And this basically, like, this secular portion of the cyclical bull market in stocks and basically everything is probably coming to an end. So paying attention to this, close look at this, and then going to use this to give us clues as to what the rest of the market is doing. But as far as I'm concerned right now, this is basically on the way or very close to flipping this trend back to the upside. We did see a little false signal here when the 821 crossed, and then here again when the 821 crossed. But the majority of the time, when we saw that 821 cross take place, here when we saw the 821 cross take place off of that 2000 dump, that went from 2003 to 2008. So we had a 5-year bull market to new all-time highs. And then again, we saw the cross take place from 2010 till 2014 top. So we had another 4-year bull market to the upside. So is it possible that when we saw the cross back here in 2021, that we now have roughly 3 to 5 year bull market? Well, that would put us at the middle of the middle of the 2020s. So maybe this bull market keeps going and it takes until, 2023, 2025, something like that, before we see, this overall secular bull market come to an end, not just our small little cyclical bull market. But, again, that's fully speculative. But if we look at the two big times when we had big run-ups, after that 821 cross, that's what it would tell us. Now, is it possible we get a situation like this where we cross up, it fails and sells back off? We cross up, it fails and sells back off? Definitely a possibility, 100% a possibility. And that would probably line up with some sort of, Fed failure or government failure that basically leads to, a multi-year downtrend. But again, energy is, like I always say, rates are the cost of money. Energy is the cost of production. So if the cost of money is cheap, we will see assets, explode to the upside. If we see the cost of production becomes extremely expensive, we will see production go down. So if money's cheap, we see rampant speculation. If energy is expensive, we see rampant contraction or crashes. So that's what we're paying attention to. That's why these sectors are so important, some more than others. But not only just what we see from one single chart and what that is telling us, but how these charts agree and disagree and can give us basically like that canary in the coal mine effect as to what is potentially going to happen overall. So we see obviously that, just a quick recap, we saw the crypto bull market beginning, the crypto winter, nailed crypto over the last couple of years, and now it's at ridiculous all-time highs, evaluations, just craziness, okay? We saw the crash coming with COVID based on transportation sector, based on our semiconductors and, some of our other key canary in the coal mine events, not to mention obviously what we saw happening in China. So nailed that one again, okay? We saw the oil bottom and the parabolic move up to retest what amounts to almost new all-time highs when everybody else was calling for oil going away. Kathy Wood. We saw macro deflation taking place and knew that the Fed would reinflate the bubble using massive amounts of stimulus aligned with government policies. So we saw basically fiscal and monetary double-barreled shotgun approach to save the economy and the bottom of the stock market and parabolic run from that. We saw what was taking place in uranium and the absolute bottom on uranium and the pump to the upside. Now everyone is talking about stagflation, deflation, uranium, oil, all the things that we got ahead of, cryptocurrency, all those things now are playing out perfectly. So what we're looking for right now, what I'm looking for, what I am digging into day and night is what is going to be the next big trend. What is going to be the next big play, the next big value play, the next big asymmetric return? That's what I'm looking at right now. That's what I'm literally spending day and night looking for. Okay? So I don't have a conclusive answer yet, but I do have some ideas. And while obviously you guys and the group in specific know I'm looking very closely at cannabis, and I'm also looking at metals and miners. This whole commodity bull run, I think, has lots of legs still on it. But I think likely we are going to see commodities coming down. I think we're going to see cost of energy, of transportation or shipping containers coming down. I think we're going to see, a lot of these things coming down before we see that continuation to the upside. But the key now is to figure out what this next big trend is so that we can get positioned ahead of time for it. So is it going to be in metals? I suspect we will see metals, gold, silver, lithium, nickel, aluminum, steel, uranium. I think we're going to see all these commodities, all these, hydrogen, all these clean energies and minerals and all this stuff go parabolic over the next few years. But I think many of them are giving us a clue that we're going to see short to medium term pullbacks or retracements. Not always trying to be a contrarian, but, when Kathy Wood starts agreeing with everything I'm saying, I start to get a little bit worried, as typically, she is either late to the party or wrong about everything. So now that I'm seeing her arguing all the things that I've been arguing, now I think probably that that trend is ready to change. So we'll see what the new direction of the trend is going to be. So But here we see industrials essentially still just trading inside the range. We got the perfect buy off of the 200 exponential and simple. We are seeing some weakness as the 200 simple has crossed above the 200 exponential. We are still inside the bullish control zone, but we do see it starting to roll over and potentially getting ready to cross to the downside and exit the bullish control zone. We are seeing our first daily red candle while we're still well above the zero line, well above the blue slope line. We have made it back up to what amounts to the top of the range, the top of the channel, the top of our trading area. And we obviously see we had a little poke out the bottom here, which was expected to the 200 exponential and simple, but that also just lines up further with our Fibonacci targets. So there was no surprise there, as these are our previous Fibonacci extension targets from the top back here in 2020 to the bottom down here in March. And then we saw essentially an ascending channel. We saw a slight breakdown from the heart line here, but saw that perfect bounce off of our Fibonacci level, taking us back up to the top of the range. If we do get the consolidation and breakout of that 1.382, our next target is going to be the measure move of our sideways channel, and then also obviously potentially going to take us up to our next Fibonacci level, which is the 1.5. But eventually we do expect the industrial sector to get up here to the 1.618 Fibonacci extension at roughly 122, which should line up depending on when we get there. Obviously, this needs to be moved a little bit to the side over here, but we would expect that essentially to happen. The top of our yellow channel, the top of our blue channel, and our 1.618 Fibonacci, leading to what amounts to probably our mid to long-term top. And when we really zoom out here and take a look at the big picture, what do we see? Well, we see that we are basically in a sideways channel, inside of an ascending channel, inside of a longer ascending channel, and that this channel actually goes back all the way to our previous dump back here from the mortgage housing crisis, basically 2008, down here to our low in 2009. So we've been operating inside of this range for what amounts to like 12 years. The CVD dump took us to the bottom of that channel, and then we've basically been operating inside of this channel now for the last, roughly 2 years. And then, obviously, if we get that little move back to the upside off of our little consolidation, we would expect the 1.618 to be our top. If we do not get up there and it breaks down here and we see some other sort of event coming down, we would see a strong support here at like the 90 range, which is the bottom of that ascending channel, and then also the heart line of our longer time frame channel. So trading very, very technically, and while you're probably not going to get rich or poor trading the industrial sector, once again, this can be the canary in the coal mine for what we actually expect, and what we expect to take place in the actual economy. So XLF next, our financial sector. So what are we seeing here? Well, we saw a long consolidation at the top of the range. We saw a breakout of that range, and now we're seeing a pullback here. As rates are pulling back, we would expect this to pull back as well. Obviously, as the banks and much of the financial sector makes their money off of loans and interest rates. But we see that a lot of the earnings and business generated in the sector correspond directly with the overall health of the stock market and the rampant speculation bubble, the everything bubble that is currently taking place. So while we're seeing some temporary weakness, I don't think it's unrealistic to see a pullback to like 40. Oh wait, I can't even round because this thing doesn't move. 39. We're at 39.93 right now. So a dollar move back to the downside. Again, not exactly a tradable range, but plenty of headwinds here as well. As another crisis with the Fed, another misstep by the Fed or by government policy could easily lead to, this crazy situation where we have some kind of Fed coin, where we have direct accounts at the Fed, and the Fed is able to reach out directly to, the consumer instead of having to use the banks as the middleman. So how does that line up with the big picture? Well, like we were discussing earlier, the banks want to give out money, but they want to give it out to the people who don't want it. The people who don't want it want money, but the banks doesn't want to give it to them because they're afraid that they're not going to pay them back. And because they're for-profit businesses, they need people to actually pay back the money that they loan them, as where the Federal Reserve can just write it off and, just put the IOU in the, balance sheet bucket at the Federal Reserve and doesn't have to worry about, profits or losses or cooking the books or anything. They can just say, okay, we'll just put you down for, permanent debt enslavement / indentured servitude. at the Federal Reserve. So I think that lines up perfectly with the potential that, you will own nothing and be happy argument. So what happens in the banks? Well, it could go either way. Do I think they're just going to remove the banking sector? No, that will absolutely destroy GDP. If you crash all the banks and make them obsolete and cut out the middleman, that's going to kill the GDP of the United States. And this is a massive sector. And it's also a very entrenched group of individuals. You could argue that the ones who rule the world, if you say there's 4 categories, big pharma, government, banking, et cetera, you could argue that this is one of the, 4 horsemen. So do I think that they're just going to be able to completely wipe the 4 horsemen off the earth? No, I don't think. I think there's too much power, in this sector and too much money, obviously. I don't think that they're going to put up with it. So while people argue for the Fed coin, I think it's very unrealistic that we get a Fed coin anytime in the near future. People arguing for Fed coin and, the end of the world as we know it, might as well be arguing for flying EV vehicles and oil going to zero by next year, or, a little pod that you get inside of and it scans your body and then it cures you of any diseases and prolongs your life by 100 years. You're not going to just come in here and destroy governments. You're not going to come in here and destroy big pharma. You're not going to come in here and destroy the banking institutions. It's just not going to happen. It's not going to happen. Not anytime short. Does it happen 5 years from now or 10 years from now or 20 or 50? Sure, I totally think that we are in many unsustainable trends, but I do not think that you're going to be, leapfrogging the banking sector and upsetting this sector anytime soon. So that's, the problem is, it's that old saying, you can be early, but you're still wrong. Like, so if you're right about something, you see this EV trend coming, like, let's say Kathy Wood, for instance, she sees this clean energy and EV and this like green world and like, everything's great and grand and there's no more pollution and it's all sustainable. And, when we fart, it smells like roses and yay, hooray, hooray for everyone. The EV vehicles, yay, everyone's happy and the world is healthy and we love you, Gaia. Sure, that's fine. But are you 20 years early? Are we going to have robo-taxis next year? Are there going to be robo-taxis driving around next year? Are we going to have flying cars next year? Are we going to have no more, ICE vehicles, internal combustion engines, no more gasoline-powered factories or diesel-powered machines or anything? And we're just going to be, powered by solar and wind and happiness? No, it's not realistic. Maybe one day, but not anytime soon. And I think that will line up with either a massive explosion, not a big explosion like a bad explosion, but like an explosion as in like accepting that nuclear power is good again, and an explosion in production and consumption of nuclear power and sustainability, or a crazy breakthrough in energy or battery storage, such as something like nuclear fission or some revolutionary, expansion of our ability to store power. Because the problem with all these sustainable power things is what we're seeing happen right now in Europe. Sure, you build a bunch of windmills, and in best case scenarios, when it's windy and everything's great and they're all brand new, you can have 100% of your power come from wind. Awesome, great job. What if the wind stops blowing? What if it stops blowing for months? What if it blows really, really hard half the time and then doesn't blow half the time? Well, you need a way to store that energy the same way that with solar, you need a massive amount of storage capacity. You can't just pump this into the grid and then just assume that in one area it's going to be dark and another area it's going to be sunny, and we'll just borrow some of your energy and you just borrow some of ours and everybody's happy and it's great. Well, the infrastructure is not in place. The technology does not exist. It's just not possible. Not yet. So that is the problem. So here we get into tech. We see potentially a double top scenario. I think we'll probably just chew through this resistance, come back down, put in a higher low if we see a pullback here, and then see continuation. Obviously at extremely high levels. We do see the stochastic starting to roll over, but the trend is still strengthening and to the upside for now. So nothing telling me this is just going to like crash or anything. Also, if we see a pullback, on rates, it's not unrealistic to think that tech gets a little bit of that pressure alleviated and then seeks continuation to the upside. We'll have to pay attention to this level, but at this point in time, I think more likely than not, we will be putting in new highs in tech in the near future. XLP, consumer staples. So consumer staples has broken through our little sideways channel off of that perfect retest of the 200 exponential and simple and the hard buy coming out of the bearish control zone. We have crossed above the slope line and the zero line. We are in the bullish control zone, but we are starting to see some weakness and bearish engulfing candle at the top of the range. So we need to pay close attention. We do have a hard resistance up here in red. It's not unrealistic to think that if we break through this sideways channel that we get the measure move and it takes us back up to that range about 75. But right now, this just looks like tightening and lesser moves off of the 200 exponential and simple. So we're starting to pick up a little bit of momentum and the upwards trend here. This is a lot of chop that we need to get through yet. So, at this point in time, I think we probably just continue to chop for now. XLU utilities. Maintaining above the 200 exponential and simple, still below the all-time highs of 2020. We are getting close to it. We're slowly just grinding and chopping our way up. But as far as I'm concerned, the most important thing is to just watch this bottom level here and then watch the heart line top right there. And then if we really zoom out and look at this picture, this thing is going back all the way to our 2008 bottom right here. And we have been trading very, very technically, almost perfectly inside of that range, with the exception of the overshot dump right here, and then like a couple of shorter term, like daily wicks out the bottom. So at this point in time, we're near the bottom of the range. We basically nailed the bottom right here with that buy. Didn't quite get down to our ideal entry, but been trading very technically. This is obviously a safety play, the same way people run to bonds. They run to utilities because, bonds and utilities tend to hold up pretty well during uncertain times. So at this point in time, I think we're basically in the middle of the range between the bottom of our ascending channel and the heart line of that channel. We are above the 200 exponential and simple. So while we're seeing a little bit of weakness kind of showing up here, I think the favor is to the upside. And it's not unrealistic to think that we get about a 10% move up here before we start putting in at least like a temporary top. All right, so XLRE real estate next. Got that hard buy down here perfectly. Coming out of the bearish control zone. Got the cross above the zero line. Momentum in our favor as we flipped over the blue slope line. Mounting to basically a double top right here, bearish engulfing candle. I do think we will consolidate at this level. What we do after that is still up in the air. Let's just zoom out here, and I want to take a look at our weekly chart here. What I'm seeing on the weekly here is basically a potential rejection off of the blue slope line, a sell, buy, sell at the top. That's our divergence signal at new all-time highs, and then initial breakdown, pushing back up to potentially put in a lower high. So as we come towards the end of the month here, this looks good right now. What I want to see is, where does this close? So if we have roughly 2 days left in the month, if we were to just close right down here at our all-time high monthly close, I think it looks good. Do have to worry about a situation like this where we basically have a hard resistance, can't break through it, and then we see a capitulation move. Obviously this was the 2020 sell-off right here. And then again, if we look back here, this was like the 2016 little dump. We saw only a few months worth of drawdown, and that amounted to our, big pullbacks. So if we do put in a topping pattern right here, we probably would see like 2 to 4 months worth of like real estate weakening. But I think it would be very difficult to get lower than like 39 on this, which is only like a 20% pullback. If we see the actual quote unquote real estate crash that everyone is calling for, the end of days, mortgage foreclosures and everybody kicked out on the street and housing unaffordable, if we see like that capitulation level event, sure, that could last for years and we could see massive pullbacks in real estate. But keep in mind, it's not like the stock market where literally, it crashes and goes down 20% in a couple days or a week or whatever. If like all of a sudden you're selling your house and then all the houses next to you, get marked down 20%, because there's a real estate crash, you're not just going to be like, oh my God, I'm just going to F it. I'll just liquidate, sell. No, you still need a buyer to come in. You need, people to come and look at it. You need bank approvals. You go into, all these like steps that take place. Some of them last 30, 60, 90 days. It's not like the stock market where all of a sudden somebody just says, oh my God, now your Tesla stock's worth 1,000. Oh my God, tomorrow, now it's only worth 700. And it's like, oh no, sell. No, it doesn't work like that. These are houses and properties, and it's a slow, steady process. So I just don't see this big crash all of a sudden coming in. The majority of everybody says, oh, if you bought a house in the last, all these like fear mongers, if you bought a house in the last year or two and, it's going to crash and you're going to get foreclosed on and you're screwed. Oh, really? So the people that got, 2% mortgages and their houses have appreciated, 25 to 40% in the last 2 years, those people are going to all of a sudden go into foreclosure. Their house are worth more than what they paid for them, and they have what amounts to a 0% long-term loan. Yeah, right. It doesn't even make any sense. It literally makes no sense. Even if you just lost all your jobs and your income and it was impossible to get a job again, if all of a sudden, and you put nothing down on the house, if it's worth 20 to 40% more, you would just sell it. You wouldn't get foreclosed on. You would literally just sell it. You would pay off the bank loan, and then you would take that other money and you would use it to rent or buy something else more affordable, whatever. Unless we see a massive markdown in prices that absorbs all the gains that we saw over the last few months or years, we're not going to see any extinction level foreclosure events taking place. It just doesn't make sense because people aren't underwater on their properties. The big difference with the 2008 crash was the lending was extremely loose. The rates were not fixed, and the prices were extremely overvalued, and they weren't paying attention to what your actual income was or anything. Is it possible we end up in a situation like that again? Sure, but most people are getting fixed loans. They're getting them at extremely low interest rates, and the prices of the houses are not going to be underwater unless we see a massive, massive sell-off in the housing market. Is that possible? Yes, but it's not going to happen overnight. We're going to see it happen. So until we start seeing supply coming online or demand going away, which probably is going to line up with massive rate hikes, none of that is even a potential problem. And then even then, so many people are locked in. Think about how many people refinanced their mortgages, or took cash out refis with extremely low rates and extremely long durations. The probability of a crash in the housing market is very unlikely, in my opinion. It's very unlikely. We'll see. Maybe I'm wrong. Maybe, is it possible we go into a long, drawn-out stagflation or deflationary period in the economies, and then we see a slow, steady grind down, with an eventual crash over like a 3 or 5 or 10-year duration? Sure, it's definitely possible, and I think that is a much more likely situation. But do I think that just the housing market just crashes tomorrow and that's it, and everybody's screwed and they're all kicked out in the street because they can't afford to sell their house and there's no buyers and they're getting foreclosed on? And no, I just don't see it happening. It doesn't make any sense to call for stuff like that until we see a slow grind down and prices going down for rentals, for actual housing markets, and until we see a bunch of new supply coming online that people aren't buying, until we see a bunch of older houses just sitting on the market and getting marked down and marked down and marked down, until we see the prices, the appreciation over the last couple of years get wiped out through a slow grind, until we see banks stop giving out mortgages and rates going through the roof, we're not going to see that happen. Now, could that be the catalyst? If all of a sudden rates start pumping up, we get a Paul Volcker moment and, mortgage rates go to 15%, even though all these people are in fixed mortgages, it's going to basically kill demand because no one else is going to want to take out, a loan for a 30-year duration at 15% or 10% or 8% after everybody else was just getting it at 2 or 3%. Definitely not. I totally agree that could be a possibility. A Fed misstep or a, fiscal or monetary issue could lead to some sort of housing crash or, slow grind down. But I just don't see it happening like tomorrow, like everybody's saying. It's going to happen. It's coming. The apocalypse. Blah. Sure. I'll take that bet. If anybody wants to make that bet, you let me know. I'll take that bet all day, every day. Now, there's an argument to be made for business real estate, but housing, no, I just don't see it. XTN transportation, is this amounting to basically a double top? Are we going to see an Eve rounding top and then a sharp atom top here? Maybe. It's a possibility. It is a possibility. We're seeing some weakness with 200 simple. We saw a perfect bounce off the 200 exponential and simple right here. We're seeing momentum to the upside. We are in the bullish control zone. Potentially double top scenario. Sure. One thing that tells me this potential, when we see these big spikes in volume, we see two big spikes at the top. We see two more other big spikes here at the top. So is this big spike in volume telling us that there's a top or a bottom being put in right now? Probably. Realistically, there's a good possibility of that. But we'll have to wait and see. I still think that another time when I've been saying something for months and I've been right, and now Kathy Wood has to come in and start agreeing with me. Damn it, Kathy, don't fuck this up for me. Now she's saying that beginning of next year, everything's going to, transportation sector is going to crash and the demand's going to fall off a cliff. And then we're going to see the stagflation/deflation. Do I have to go re-research all this stuff now? Because I know if Kathy believes it, it's going to be wrong. So, but that's cyclically probably is what's going to happen here. We see typically those crashes in transportation sector happening at the beginning of the year. And anyone that runs a business ever, the majority of businesses see a massive slowdown in January, February, and then it starts to pick back up, mid-February around like Valentine's Day, and you start seeing that grind back up. So if we look back here at 2020, this was like the capitulation level event in like January, February, breaking down from the 200 exponential and simple. So if we're going to do something similar to that again, when do I think it's going to happen? Well, probably somewhere around January, February, something like that. So we'll have to wait. I do predict, lower prices in transportation. We're potentially seeing shipping freight and stuff like that, prices topping out, but they've gone absolutely parabolic. So, but leading into the holidays, I think it's realistic to think that the post office, the, USPS, and if FedEx is still in business, they also jack their rates up based on demand. We've already seen some structure and provisions for this, So it seems realistic to me that we could actually see like a blow off top continuation, new all-time high on this before we see that event. So Jets next. Okay, so this is a key one, as this is obviously transportation sector related, but overall lines up with my theory on planes, aeroplanes, and that portion of transportation, the people transportation sector, as well as many packages also are shipped around the country and world on aeroplanes as well. So, if we're going to have all these vax mandates, it's going to stop people from traveling, within the country, within, states, within, continents, so if we see less international travel, less business travel, less, travel in general via airplanes, because people don't want to be around other people, or they don't want to wear masks, or they don't want to get, the medicine, whatever it is, probably we're not going to see jets recover. We're probably not going to see these airplanes, these, airlines recover. So here we are basically just teetering on this green support line, breaking down below the 200 exponential and simple, and now they have both flipped over red. As we break down from this level, I think we're very close to getting a powerful move to the downside. Somewhere around, we're at 22 now, so 10% move to the downside to 20, or possibly 20% move to the downside to like 18. Do we see continuation after that? It's very likely that we do. But at this point in time, it looks like this has very clearly topped out. So do we have like some form of like wave 1, 2, 3, 5 situation? Do we have a 1 here, a 3 here? 5? I don't know. I mean, there's not a technical, like pretty looking pattern playing out through this. It's, I think, more likely than not, what we're seeing is more like an A, a B, and then we're going to see a C to either a higher low or potentially even a lower low, as these like potentially crash. Maybe we see another bailout. Maybe the government doesn't give the airlines a bailout, and we start to see consolidation as some of them go bankrupt. I don't know what's going to happen. I do know we're near the bottom of the range where we would expect some kind of support to happen. So I'm paying close attention to this for a potential short-term bounce. I don't know if it's just going to let go right now. But again, I mean, if less people are flying this holiday season, if we're expecting a slowdown coming into like January, February, we'll see. I think more realistic there or not, though, or more realistic than not, that this area holds and we see a little continuation back up before we see more of a heavy sell-off. So. But I could be wrong. We'll see what the chart tells us. That's literally my opinion coupled with technical analysis. And we know that my opinion is useful, but the technical analysis is usually flawless. So hail, obviously just another form of or portion of the transportation sector. It's still just trading very technically inside of our little whatever you want to call it, wedge or triangle or whatever it is. We're seeing basically a range bound between the 200 exponential and simple. We're topping out at the top resistance of our little pattern right here. I do expect continuation back down, potentially to put in a new low somewhere around like that $52 range. But as long as we are underneath the 200 exponential and simple and they're rounding out, I think we see continuation to the downside. Could a 100,000 Tesla order from Hertz save this sector? And I'm wrong? Probably not. I mean, the thing about the Hertz news that blows my mind is, sure, okay, how many cars behind is Tesla right now? Like, when do I get my Cybertruck? Like, what the fuck is going on? So, it's like, what is the point? If someone owes you, think about Tesla's, think about their production as an IOU. They say, I owe you a car. Okay, cool. So, if you already owe me a car, and then somebody else gets in line behind me and says, yeah, I'll take 100,000. And you're like, oh, so 100,000 more IOUs? Sure. So now there's like a million IOUs. That's great. But the problem is not Tesla's demand. Lots of people want a Tesla but can't get it. So we don't need more demand. We need more supply. So how long is it going to take Tesla to get this supply online? We already know for a fact that as many Teslas as Elon Musk can make, people will buy. We know that for a fact because there's always a massive waiting order. The problem is not the demand. The problem is the supply. So instead of getting all hyped up because we have 100,000 more, IOUs for a Tesla, let's get excited when we see an extra 1 million Teslas coming online every year. Let's see supply come online. That will make me extremely bullish on Tesla, not demand coming online, because we already have plenty of demand for Teslas. And where's my damn Cybertruck? Pound Elon. Where my Cybertruck at? UPS, so obviously got that beautiful move and an overshot. So that was our 15% entry off of the 200 exponential and simple. That was our breakdown gap fill, which we were expecting. We came down, filled that gap perfectly, and then we had our gap left right here. So we shot up, we overshot the gap right here, but all but filled it. So I think we actually will probably come back down here. I spoke specifically about how I was very bullish on UPS, especially coming into the end of the year, the holiday season, the potential rate rises, the excess demand as people want goods. They want them fast, make sure they get them before Christmas holiday season. But yeah, back up here at the highs. I do think we see new all-time highs. Do we come back down and fill the gap? Do we get a breakaway gap? Do we break away and then eventually come back down and fill it? I don't know. But, this thing is trading very technically, doing exactly what we told it to do. UPS, you are my bitch. FedEx, however, is, oh man, it's like the ugliest stripper at the club. Okay? You know what I mean? UPS is like, that fine stripper that everybody's waiting for a lap dance from. FedEx is like that scraggly one that looks like she was just smoking crack out back, but there's no weight and she's only charging a couple dollars. That's what's going on here, guys. So that's what's going on. FedEx can't even get the push up here. Can't even get up to fill the gap. Do we still see the continuation? I mean, the trade so far playing out. but, very, very pathetic, very underwhelming in the grand scope of things. In no way surprising as we see this giant megaphone of patheticness from FedEx. Also see, we had the breakdown from this level, double topping, and now here we are just retesting that breakdown. Does this underperform and just roll over and go much lower, back down into like the 180s? Potentially. It potentially does. I would not be surprised to see this fail and just roll over. Already rolled over the 200 exponential and simple, well below both of them. FedEx looks absolutely pathetic. I'm hearing reports of, FedEx having issues, delays, disturbances in the force, all kinds of different things. FedEx really dropping the ball. Very unfortunate. But you know what? I like everything I've ever shipped. I've probably used FedEx like a handful of times in my life. I don't even know who uses FedEx. So it doesn't surprise me that it's trash. It really does not surprise me. But there is a strong argument. I hear all the time the argument between, United States Postal Service employees, FedEx employees, and UPS employees, and like the uniform argument and the animosity between them. So you could argue that FedEx maybe has better uniforms, but a shittier business. Maybe you like the turd brown of UPS. Maybe you like the, angry attitude of the Postal Service and potential imminent threat of them, going postal. The choice is yours. But as far as the charts are concerned, FedEx is trash. All right, let's keep it going, baby. All right, so DXY, we started to see a little bit of weakness in the DXY. I was honestly anticipating a pullback, which we did get, but I was expecting a little bit further of a pullback. I really was expecting us to come down at least as low as 93. I would not rule it out just yet, but we appear to be hanging on to the 821 and, attempting to move back to the upside. Now, we know that any strength in the dollar is going to be a headwind for gold. So even if we see the rates coming down, but the dollar rising again, it's going to be difficult for gold. What does this tell us about the global swing of things? Well, this tells me that, as long as the dollar is strong, as long as we're putting in the strong W bottoming pattern or head and shoulders, whatever you want to call it, as long as we're above the 200 exponential and simple, the dollar is strong, tells me I want my money, I want my investments, I want my capital deployed in the United States over the other basket of currencies, Europe, Canada, Great Britain / England, whatever, So could that change? Sure. But right now, still looks very bullish. And then if we switch over to the monthly and just kind of get that perspective, we see the 200 exponential and simple retest right here. We see the higher low, low right here. We see the 200 exponential on top of the 200 simple and both angled to the upside, slope to the upside. I think it's very realistic to think that the dollar will go parabolic and we will see a quick 10% rise back to retest these levels, at which point in time, would not be surprised to see us get a technical break to the upside. Hard buy coming out of the bearish control zone, bunch of green histograms approaching the slope line and the zero line. 821 preparing to cross back to the upside on the monthly. We talked about this monthly close above them, a retest this month, and now here we are 2 days away from closing above the 821 and tightening this gap up again, and we see the MACD, the moving average convergence, divergence, we see them converging and then about to cross, at which point in time we would expect to see multi-month or year, continuation to the upside. And if we just, I don't feel like talking about this right now. We can talk about, I don't feel like doing that right now. I'll do another deep dive on the dollar sometime in the near future. But as you know, I have a list of endless things to accomplish. Tesla, new all-time highs. Hertz, hooray, $4 billion order. Extra $100 billion in market cap. Makes perfect sense. It makes perfect sense. Is this going to be one of those topping patterns? Do we see a shooting star here? Same exact thing we were talking about earlier. If we see a bearish candle come in and what amounts to, 50% of our bullish candle get wiped out, if we see Tesla drop down to the 980s or 970s or potentially gap fill, at 911s, you better call 911. Someone please call 911. Tesla's been shot down with a bullet in its heart. We'll see. Options driven. speculative. I did not expect Tesla to burst to the upside right here. Is it going to pull a Bitcoin where it breaks out to the upside and then just kind of like sells off, and maybe that ends up being a double top? I don't know. I really don't know. But what I'm seeing right now is, the stochastic getting ready to cross back to the downside. No real continuation after this little squeeze. A little breakaway gap that we're potentially coming back down to fill. Overall, Tesla still looks very strong. But is this our blow off top? Is this our, explosion to the upside followed by further downside? I really don't know. Right now, Tesla looks very strong. I would have much rathered this news be based on anything other than a bankrupt company promising to buy 100,000 Teslas. Yeah, I mean, we'll see. I think probably what we're looking at is a retest of 900, at which point in time we can determine, does it hold 900 and then we see continuation? Does it fail to hold 911 and this is a failed breakout? Your guess is as good as mine right now. But do we see a PayPal Pinterest situation where this all gets walked back? And maybe Hertz comes out and goes, oh, actually, we just made a deal with Ford and we're going to buy a bunch of Ford EVs, or we're going to get a bunch of EVs from Ford and Volkswagen and General Motors and Tesla. I don't know what's going to happen, but I have a feeling we're going to see some stupid news article that in no way is surprising that lines up perfectly with a retest of like 900. And then massive options like, plays, bearish options plays. But we'll see. Maybe we just run straight to the moon. We all get on the Tesla rocket, the cum rocket of Elon Musk. We pack up our Shiba Inus, get in our Tesla, drive it onto our SpaceX rocket, and then we all go live on Mars in the golden Peter Schiff-shaped citadel. So that's my prediction. But that's not based on technicals. That's my personal opinion of what happens in the future. But I could be wrong. That's a lot of speculation, a lot of rampant speculation. But if there's one thing I'm confident about, it's all of that stuff I just said. But I could be wrong. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I'm an investor. Uber doing exactly what we discussed. Retest of a 200 exponential and simple, rolling over. Looks very weak. This was the promise that Uber was one day going to make some money, and now they're not. The only reason that Uber is still alive as a company, in my opinion, Uber Eats. And the longer we go on through this situation, the less people are afraid to just go out and buy their own food. The more bored people get of just sitting around in their houses and lockdowns and whatnot, the more likely this is to just roll over. Competition comes online. People don't want to go back to work because they're, Shiba Inu coin millionaires instead of Uber drivers. I think we're going to $40 to close this gap. After that, probably go lower, but we will see. $40 holla. Uber Eats. Hooray. Pinterest. This was the exact move we talked about in Pinterest. We got the absolutely beautiful trade setup to the upside. Quick little twendo, 21%. Boom. Fell slightly short of our potential 51% move. It actually was closer to like 35%, depending when you closed your position or got out or the market took you out. But now we see the Pinterest capitulation taking place, as we have now taken out the low on Pinterest. It turns out that exactly what I said, 100% was correct. That this was total bullshit. PayPal was not going to buy Pinterest. This was literally just some big boy market maker who was upside down in their position from the gap down back here that said, oh no, I need to get out of my position. Let's just leak some fake news to Bloomberg and then I'll just dump my position once it pumps back up and fills the gap. Check. Okay, now let's run it down to zero. Check. So, I don't want to always just say I was right again, but I was right again this time. So, place your bets on the Tesla, Shiba Inu, Mars, Peter Schiff, Citadel, Golden Spaceship. Because I'm just saying. But maybe I'll be wrong on that one. Maybe that's going to be the one I'm wrong on. But I doubt it. I'm pretty confident on all that. Do we get down here on Pinterest to $25 and close this massive gap that we left an eternity ago back. People don't even remember that gap is there. Maybe not. Maybe this is a breakaway gap that we just never come and fill. Or maybe we're just headed down there right now. Maybe we are headed down there right now. This thing trades pretty technically. That also would line up roughly with like the 0.5 or 618 in green, which is essentially from the bottom to the top of this entire wave right here. So, I mean, doesn't seem unrealistic. Could we just get a little short of it and maybe just come down to 36? Yeah, I mean, I think it's definitely possible. I'm definitely looking at a potential scalp move to the upside here. But I mean, we just got the scalp move to the upside. We filled this gap, all but filled this gap right here. So now we have another gap right here. So let's see a little more downside, and then maybe we'll play that next gap fill up to like 57. But you guys know how I feel. After a successful trade, after a nice move, after a trade setup plays out, I'd like to just cool it for a little bit and wait and let the chart kind of tell me what it's planning on doing next. So that is what I'm looking at. So wish, unfortunately, you can wish upon a star all you want, but this thing will never go up. We are coming down here to sweep the lows again. We do have 1, 2, potentially a third drive of bullish divergence if we come down here and put in a new low, at which point in time, maybe then we can come back and fill the gap at 930. At that point in time, it'll be like 100% move to the upside. But this is looking less and less probable. Definitely seeing some weakness. A lot of times, though, when we see a big bottom get put in, we'll see a nice aggressive candle after like a consolidation. So if we see one big candle get in, like come in out of nowhere to the downside, I will probably buy that. But this failure to cross the 821 to the upside, definitely showing some weakness. It will stay on my watch list, but not looking great, ladies and gentlemen. Airbnb, consolidating, holding on to the range for now. We do see the 821 preparing to lose across to the upside. We are holding on to the 200 exponential and simple. We're basically at resistance right now, on top of support, below resistance. I need to see some sort of continuation in one direction or the other while we lose strength on the TJD, TDMACD. So as long as we're above the 200 exponential and simple, I technically would favor this to the upside, but we're definitely seeing like this may potentially be rolling over and getting ready to flow to the downside. Bumble saw one more pushback up. Again, this is just same thing. We're still just range bound. We have this bullish triangle, this ascending triangle. We have a very powerful resistance in blue right here until we break in one direction or the other and see some sort of consolidation / continuation. I really have no directional bias on this. I have a feeling it's going to roll over to the downside. But again, as far as I'm concerned, basically just a coin flip at this point in time. The pattern favors upside, but I'm seeing very clear indicators that this is just not going to be able to burst to the upside until we see further downside. Because every time we've gotten back up here, we've seen violent selling come in. But getting very close to completing this pattern and breaking one direction or the other. So fire up your Bumble, ladies. Buzz, buzz. Time to hit up those gentlemen. No more unsolicited junk pics. They got to ask you for them now, gentlemen. It's 2021, okay? Things are changing. If they want your junk pic, they're going to hit you up and ask you for it. You don't just send them unsolicited anymore. Unless it's a Polaroid in the old school mail. Wink, wink. You know what I'm talking about. Baidu, we're definitely seeing some weakness coming in China. I know everybody was calling for the bottom. China parabolic. This is it. It's done. It's bottom. We got the retest of the 200 exponential, and it looks like it's rolling over. I do not like the price action I'm seeing in China. It is playing out as discussed, as expected. I told you guys I was expecting a dead cat bounce. I thought we would see some more continuation on some of these. Alibaba, pathetic underperformance. I expected this to get up near 200. We saw that out of Baidu, but Baba looks very, very weak. I'm sure it has something to do with Jack Ma. TME, Tencent Music. Again, looks like it's getting ready to come back down here and sweep the lows again. Probably go to new lows. We did see quite a bit of bullish divergence, but no follow through. Is it possible it still gets follow through? Sure, but does not look good. Diddy at my foot, and I want to touch it. Breaking back down below 821, hard sell. Looks like we're coming back down to the lows. We do have a very clear support line down here at like $7. Looks like we're headed down there to test that once again, see if it holds. BZ Kanzun Limited doing the exact same thing again, just continuing inside of our triangle pattern. I expect resistance, I expect support, and I expect basically the mean just keep oscillating in a tighter and tighter range until we finally get a break in one direction or the other. And the way China is looking right now, it's probably going to be to the downside. But anything could change in the meantime. JD.com, we were able to reclaim the 200 exponential and simple, temporary finding support at the moment, which is good. We are seeing, however, a hard sell. We are seeing some bearish divergence between our indicator oscillators and our price action. Obviously have this clear support line here, clear resistance line here. I think this will probably, when we get down to it, line up with the 200 exponential. Maybe 76 is a quick little scalp buying area, and then we get a push back up to like 88. But again, this thing could just literally get a violent gap down at any moment, in my opinion, and I'm just not seeing the strength that I would want to see to be taking a position in something. The risk reward is just not there right now for me. NEO, stronger than most of the Chinese stocks. Got a little push up here with the Tesla news and everything, but again, just trading between the 200 exponential and simple. I expect it to just oscillate in this range until we see a break and continuation in one direction or the other. And again, my bias is going to be to the downside. We do see obviously some key support levels here. This green support level at like 35 is very strong, but I think in the near future that breaks and we do see continuation to the downside. EDU, unfortunately, looking like it's going to fail as well. Not going to just wait for this to come down here and just take me out. I will probably just keep part of my position, or I don't know. We'll see. May just use we'll see. May use options rather than selling. May just sell basically at a couple percent loss and then just look for a reaccumulation at a lower price. But at this point in time, could not break through that little 250, 240 resistance. And definitely not going to get up to 3, let alone come back here and fill the gap at 570 anytime soon. Based on what we're seeing, I will definitely keep part of this position. As I am bullish on this company technically and fundamentally long term, but I think there's probably going to be a better entry based on what we're seeing here. So EDU and China overall disappointing, unfortunately, but it is what it is. It's all about risk, reward, probability, and position size and management. Can't all be winners, folks, unless we can FedEx that price action straight to $9 and fill the gap. But probably not. Should have bet on the UPS because FedEx could have the uniforms, the sweet, sweet purple pants, but not looking good for the price action. Purple pants or price action, take your pick. Peloton, giant descending triangle. Looks like trashy trash. Maybe soon they will announce that they're going to have their own line of headbands, or I don't know what their next little news will try to be to pump the price up. But, obviously Peloton is trash. Giant descending triangle coming back down here to sweep the lows again. By the time we get to the next earnings, I'm sure it will get absolutely crushed once again, absolutely disappoint. And then maybe they can say, we're going to make new Peloton water bottles. Oh my God, let's go. Oh, and we're going to fail. So, yep, Peloton, straight up garbage. It is the Nordic track of 2021. Sure. And if you don't know what the Nordic track is, just Google it. Okay. It's a ski machine. The old ski machine. TSM, Taiwan Semiconductors, had a nice little trade setup play out off the bottom of the range. Basically just range bound. I expected us to get rejected at the 200 simple, 200 exponential. Now we're just trading in that range. I do think more likely than not, we see a break back down and retest at the bottom of the range. I do think this is going to go to like $90 soon. Again, similar to Tesla, the problem with these semiconductor stocks is not demand. Everybody wants the semiconductors. They demand the semiconductors, but the problem is not demand. It is production. So semiconductors and Tesla in the same boat here. This is obviously not the greatest one, and also has some serious headwinds as far as potentially not existing on planet Earth much longer. Long term, though, very bullish. But short to midterm, could get sticky. Things are heating up in Taiwan. Intel finally got that breakdown from the 50s to the 40s. I expect continuation. This thing is trash. It has not put in a new all-time high since 2000 in the most bullish time for semiconductors ever. Failed to break out to a new all-time high. It is a trash bag company. Will it one day redeem itself and come back and, make good on its name? Sure, I definitely think it will. But will it be in the 30s before then? Yep, probably. Triple bearish divergence on the monthly. Trash bag company. But I own it for the dividend. Sure, okay, great. Enjoy your dividend while it falls 50% in price. So, great, awesome. Enjoy your dividend. Great job. NVIDIA, nothing really to say here. Continuing to outperform literally everything else in the stock market. Consistently just crushing face. Dominating literally the entire space. If you're going to own one thing in the stock market, probably should be NVIDIA, as this thing has just absolutely destroyed everyone and everything. AMD had a nice little pop up here. It took out the high. Seeing a little bit of weakness. 2 rejection candles in a row. Shooting star type candles in a row. Definitely looks like it wants to roll over here. If this holds for support and just goes sideways for a little bit, I think it can burst to the upside. Every time I look at the fundamentals, every time I look at the balance sheet, the ratios, I just throw up in my mouth a little bit and just yikes. Yikes. SMH, VanEck Semiconductor ETF, consolidating at the top of the range. If you don't want to own the winner and you just want to basket with the winner and some of its buddies in there, you can buy SMH. But you guys know I like to long the strongest and dump the weakest. Obviously that is why I am all about the NVIDIAs and no on the Intels. But I do like ETFs, honestly, because it gives you a little bit of everything. But typically, if I'm in an ETF, it's because I don't feel like putting in the research or like in the specific companies in that space. I'm not sure who's going to be the winner, but typically I would rather be concentrated in the winner. NVIDIA. ARK, ARKK. Kathy. Sweetie, what are you doing? What is you doing, Kathy? Oh no, Kathy. Back down at those December 2020 prices. A whole year going sideways. Billions of dollars flowing into your fund while everybody finds out that I don't want to say you're a fraud. I don't want to say you're a failure. I don't want to say let's just say you're having a rough 2021. I like this. I like when all my ETFs go sideways and down. It makes me think that things are good, because if we were in a bull market or a bubble, then everybody would just be slapping me on the ass and high-fiving me. Good job, Kathy. All in with leverage. Cause no. Shut up, Kathy. You sound stupid. A whale blubber. One of my favorite things is the ARK, like Kathy Wood's little videos she does. If you don't watch those, you should watch them. And I think she finally got like a public speaking course or like speech class or something, because she's finally cutting out the ums and the ahs, because it was unbearable for a while, because she would literally just say I feel I feel and it was unbearable to watch. She's finally not doing the us. It was a really weird situation. For whatever reason, I I'm like a masochist. I like to torture myself listening to some of these people, for like comedy relief. Kathy Wood is one of them. Jen Psaki is one of them as well. There's quite a few other ones. And for whatever reason, it seems like a lot of like these predominant, like powerful women also have difficulty with public speaking. I don't know why or what it is about them. I really don't. Maybe because they're lying, maybe because they don't believe in themselves, they lack the confidence, maybe they're just not used to it. I really don't know, but it's just this massive pattern. And honestly, I have to give props to, Kathy Wood. I got to give props to Jenny Circleback Psaki. Got to give her props because both of them have been doing much better with the They're both, Jen Psaki, you could argue, is still probably the biggest liar in existence, and constantly like talks down as she tries to defend like everything wrong with our current government. Kathy Wood, has these narratives. She sticks to her guns, and is pretty much wrong about everything, at least like time frame wise, for like the last year after basically just gambling and getting lucky on like Tesla and Bitcoin. But I give them props on their public speaking. Yeah, I think that's where I'm going with it. I give them props on their public speaking. They're at least not as unbearable to listen to based on the ums and the uhs. Still, the narratives and the lies, not great, but very entertaining. So make your popcorn, sit in for the ARK Invest little calls that they do. Very, very enjoyable. I love hearing Kathy talk about why she was wrong about oil, talk about whale blubber and EVs, all that good stuff. It's honestly comical. Love hearing her basically say everything I say, but like 6 months to a year later, after it's already played out, right before it goes in the opposite direction. I think it's hilarious. ARKF, slightly stronger fintech innovation, but not looking good. Once again, completely wiped out any potential gains for the entire year. Yeah, not good. I mean, record outflows, billions of dollar outflows on these ETFs. How long before a capitulation level event on these? So Michael Burry, wrong about shorting Tesla, right about shorting Kathy Wood. And, if you're in the group, I made that little comment the other day about Kathy Wood couldn't actively manage her way out of a wet paper bag. Sticking to my guns on that, guys. She's trapped. And I think it's hilarious. She like moved to Florida and is like moving ARK home base to Florida, but she won't come out and say it's because of taxes and pure chaos that she left like New York. She won't come out and say it because a lot of her like innovation and fintech and EVs and no more fossil fuels, all this stuff. I know she's literally just quote unquote lying or pushing her agenda because she knows it's like the hippie, like, sweet smelling fart crowd, save the earth people. And she doesn't want to make them mad by saying that New York is turning into a liberal shithole with ridiculous taxes. And that's why she left. But I mean, we all know, Kathy, you didn't move to Tennessee. You moved that out loud. Skills, got that little bounce off of the lows right here. Hard buy coming in, already getting back up towards the top of the range. This is probably going to underperform and not make it back up here to 1550. We will see. At resistance at the 886 here. I mean, at this point in time, though, this isn't even really. I mean, that was basically. Oh man, well, I mean, what's this thing gonna do? I honestly, the most bullish thing that Skills could do right here is temporarily top out, come back down, retest this as support, and give us like an inverted head and shoulders pattern. I would actually probably, maybe, possibly take like some sort of scalp move, at least for like a short term little bouncy bounce on this. I think we could probably get something like this, like potentially. I don't know if it's going to happen, but that's what I would be looking for. If you ask me what would make me bullish on Skills, if we just burst to the upside right now, sure, that would look good. Do I think that's going to happen? It just seems unlikely. I think it's going to be very difficult getting through this level right here because basically all the price action is above our heads. So every time it gets any kind of move to the upside, it's just going to be met with extreme selling pressure. But there could definitely be some potential there for like a $15 retest or something along those lines. But again, there's just so many other things. Why catch this knife? There's other knives that would be better to catch, or trades that aren't catching a knife that would be better to take. Let's keep this thing moving though. I know I got my entertain myself slash listeners 150. Yeah, we could do this in an hour. I was going to do this one a little short today, but since we got started late, I'll go the full distance. I'll go for you guys. The full 3 hours, bros. I got you, dudes. I got you, homies. Let's do it. Surf's up. Teledoc. Oh no, massive wave coming in. It's crashing. Oh, I can't breathe. I'm underwater. I'm drowning. Oh. Yeah, Teledoc not looking great. Not doing anything differently. Just putting in a series of lower lows. We are seeing some bullish divergence taking place between 0.1, 0.2, and 0.3. The real question is, are we ever going to get any bullish push to the upside? If we do, it could easily be like $25 move. A nice little 15-20%. I don't know. I think people have forgotten about Teledoc. If there's one thing I know, based on current trends, people don't care about their health anymore. They're just over it. They've been so scared about their health now for like 2 years. And, oh, am I going to get the CVD? Am I going to die? Meanwhile, while I was worried about that and I didn't die, I gained 40 pounds and my mental health has gone closer to negative. So, I mean, at this point in time, I think people are ready to just capitulate on their health in general, under like a broad spectrum. And it's not funny. It's actually very, very sad. It's terrible what's happening, right now. People putting off cancer surgeries and all kinds of other stuff, and people not being able to travel because they didn't get their medicine. I mean, it's terrible. All this whole thing is just, the real pandemic is, what has actually happened, in my opinion. I mean, I'm not saying that there's a fake pandemic by any means. I'm just saying the real, there's sort of like a diminishing returns type situation, or at what cost type situation. We did all this stuff to attempt to stop one thing, and then did all the stuff that we did in the meantime make us overall less healthy as a society, whether it's mental health or, weight or whatever. Marriages are not looking so great, making less kids, people hating their body, hating themselves, spending more time on social media. You could argue that maybe the juice was not worth the squeeze. But what do I know? I'm not a doctor. This is not financial advice, my dudes. I talk with funny voices and I draw colorful charts on the internet and talk about assets. It's not financial advice. I'm not your financial advisor. Please do your own research and trade responsibly. Also, please consult your actual doctor or medical representative before making any decisions. Okay, great. So yeah, Teledoc. And not in a good way. Palantir, just kind of hanging on. Again, this is one of the ones where this is nothing for me. This is a coin toss as far as I'm concerned. Until we start closing back above like 27.30, I don't expect this move to take place. And if we just continue to chop around for here, I think we're more likely to get the breakdown. I really would have liked to see the push up to our red resistance and our blue support and see that reject us and then a confirmed breakdown. As that is a very common thing to take place. Looks like it wants to roll over though. But again, I'm pretty neutral on this in the current range here. I'd say pretty neutral overall. UBX, Unity Biotech, aka the race to the bottom. We are down at $2.22, putting in all-time lows. Can't go any lower, bro. It's already so low. I mean, it probably goes to zero right around here, earnings, like mid-November. So give it like 2 weeks. This thing should be at zero by then. I mean, eventually it's got to carve out a bottom, right? And so you look at the actual financials on this thing, and it has no product. It has no income. It's not even a company anymore. It's literally just a ticker. It's nothing. It's paperware. It's like a cryptocurrency at this point in time. But you guys know how I feel. Anything under $10, if it's got a name, if it's been around for a while, maybe somebody comes in, picks it up, gets that acquisition game on, turns it into a SPAC. Boom, 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 boom. Up to 10, up to 20, up to 200 if Trump puts his name on it. But then it probably crashes because there's no actual product behind it. But eventually it probably succeeds. But maybe Chamath swoops it up. Palahapapatia. Maybe he swoops in. I doubt it though. Unity Software, if you're going to go after the U, this is the one. Is it going to make a U-turn right here after it finally came up and closed that gap and break to the downside? It looks like it. It definitely looks like it. I who drew this little curve? Who drew that? Oh, that was me. Got a nice little trade set up. Came back up, retested our support. It is still technically above the 200 exponential and simple, so I can't get too bearish on this just yet. I don't know why that is so entertaining to me. I guess because I forgot, and then it kind of just, it's like comical a little bit there. I think we have something like this. If we get a breakdown below like 133, I think probably like 115 or 120 is very high probability. But overall, I do like what they're doing. Zillow, yeah, so we got the perfect touch of the 382, got a little bounce in. It definitely looks like it's trying to see some kind of continuation back to like 105 or 120. But I think most people are probably just going to be trying to unload into that. The fact that it's seeing very little bounce right here tells me more likely it's probably going to roll over. I will take a position on Zillow at like probably $65. Maybe that was a strong. I will probably take a trade on Zillow at that 0.5, 65 range. Yeah, I'll probably take a trade at that level, but definitely in a bear market, definitely has some serious headwinds. The majority of their actual income was coming from their quote unquote house flipping. And then they came out and said, we're not going to do that anymore. And as a matter of fact, we've literally just been losing on every house that we tried to flip. And we can't find anybody to do the work, to do the flip, to sell the house. So we're just carrying a bunch of houses that we overpaid for, and we're selling them at a loss. So not the best business model. Not everybody can be Amazon or Tesla and just go years and years and years without ever making any profits. Especially not at the end of a potential cyclical bull market. So Corsair, again, new low, back down at our target area. I do expect it to hit the 618 perfectly at like 23. Again, maybe look for a scalp there. Looks very weak here. Maybe it just blows straight through 23 and, we see this thing down at like 18 or 19. This just looks terrible right now. Full disclosure, though, I don't want to be seen biased right here, pumping it up with all the nice things I've said about it. I do own some Corsair components in my computer and also some stonks, but it's literally just leftover profits. I'm definitely not deploying any fresh capital into Corsair. But full disclosure, I do own Corsair components in my computer and also some Corsair stock. So the things that I say about it, no matter how bad they are, it's not just to pump up the stock or pump it down so I can buy it cheaper. It's neither. It's neither one. So just want to be honest with you guys here. Don't want you to think I'm pumping up my bags or pumping down my bags. Zoom. Looks like another rejection off of our green resistance right here. Matter of fact, I don't even know why this is green. Why are you green? Was I drunk when I drew this? You should be red because you're resistance, not green. Green is for support. Red is for resistance. Duh. We still got that gap up here. Do we close the gap? Little 21% upside here. I don't know. It looks less and less likely the longer we do this for. We are picking up some momentum. We have flipped the slope line over blue. We're up in the bullish control zone, but it looks like it's just getting ready to roll over again. Again, I'm looking for something down here in like the low 200s, 200, 220. Could just burst to the upside and fill the gap. But again, not looking strong. Let me put it that way. Not looking great all year. It's like the Kathy Wood of, video streaming communication stocks. It's basically gone sideways to down for the last year after a nice run up. So Kathy is like, her and Zoom have a lot in common. Let's put it that way. Square looks okay. Jack Dorsey obviously has lost his mind, talking about hyperinflation coming to the U.S. and all this stuff. He's flooding the whole world. He's pumping his Bitcoin bags. You know, what he should be doing is cleaning himself up a little bit. Because, bro, you're like a billionaire. Let's work on your appearance a little, okay? I normally don't push for people to, you know, spend ridiculous amounts of money on like grooming or plastic surgery. But, Jack, let's get it together, dude, because you look homeless. Yeah. So stay off Twitter and get your fucking life together. Obviously, he does not understand the economy or has some, you know, ulterior motives pumping up Bitcoin. But yeah, no hyperinflation, Jackie Poo. Sorry. You're way too late on that. So what is Square going to do? Probably just range trade. If I had to guess, I would say it's just going to trade inside this range that it's been trading in. Yeah, so maybe 190. Got some decent support above the 200 exponential on simple, losing strength. Could it get a pushback up here first? Does it go back to the top of the range or does it go to the bottom of the range? Coin toss, but I know that, you know, we're closer to the top than we are to the bottom, and more likely than not, we're not going to be breaking out anytime soon. So I would rather take a position at the bottom of the range than anything up here. So been going sideways all year. Another one of those just weak. It's all priced in, bro. So PayPal falling off a cliff, officially has entered a bear market below the 200 exponential, below the 200 simple, lost the slope line on both those. And then also, this is something I don't talk about often, but when I see a break of a 200 exponential and simple, and then I see a bunch of volume come in, especially not just one candle of volume, but multiple candles, big volume spikes below the 200 exponential and simple, and a bunch of like, you know, red blood in the streets. We're at support right now, so maybe we see a pushback up, but this thing looks like it wants to see continuation. I would not be surprised to see this at somewhere between 208, maybe even 170. We have a strong support right here. We have a technical breakdown of our little descending channel right here at like 2.25. But I mean, in all reality, this is going to start looking like an atom top, a sharp pointy top, and then a rounding top. And then a breakdown from that level would give us a measure move. You know, does PayPal go down to like 140? I mean, I don't know. Maybe that's pushing a little too far. Does it lose another $100 in value? But there's definitely an argument to be made there. This is very weak, and this is like, no pun intended, a big red flag. Not good. Not good. eBay looking strong, broke out once again, past its previous all-time high, back down, retesting it again. Again, it looks like it wants to consolidate or trade down. This one has not touched its 200 exponential or simple for a while, but much like you know, some of the other strong tech stocks, this one has just been melting up powerfully to the upside. Definitely one of the better stocks to own. We do have our earnings was reported at 90 cents. The estimate was 89. It was technically a beat by a penny, by 1.5%. So did they just cook the books to make it look like what people wanted, but not go any further to, like, you know, blow away expectations? Sure, they did the bare minimum. You know, you want 20 pieces of flare, they gave you 20 pieces of flare. You want more flare, make the rule 21 pieces of flare, or 25 or 30. But definitely doing the bare minimum. Going into the holidays, though, I do expect them to strengthen. But we got to see, you know, no matter how much they strengthen, is the strength going to be slowing? Are they going to beat estimates, but because they lowball the estimates? I really don't know. We'll have to wait and see. But I do suspect, and, you know, and again, here's the thing about eBay. Okay, a lot of what you can buy on eBay, well, there's, you know, you can buy a lot of stuff from overseas and all that stuff, but a lot of like the local listings, as in like in your general area, is from actual just regular people or businesses that already have products. So if you can't find products because stores can't get them, something like eBay could do extremely well over this holiday season, where there's all these bottlenecks in supply chains because you're buying it directly from like people or businesses or whatever that like have the item in stock, like in their possession. So there's a strong argument that eBay could go absolutely parabolic this holiday season, as you know, people are forced to basically buy from places like eBay. And maybe we see an Amazon breakout finally. I don't know. Snap is next. So Snap did exactly what we were expecting. After that failed breakout to the upside, it capitulated, and it did so in a violent, beautiful fashion. Not only did we close the gap back here that we have been expecting to close, we did it and then some. We got the nice, juicy, extra gap fill, but now we left the gap back to the upside. So you guys know how I feel about this. We have technically entered into a bear market. I think we're probably going to find support here sometime in the very near future off of this level. And then I think we're going to just see a potential gap up or gap fill back to come back up here. So now we have a gap to the downside or to the upside right here. And now we have a gap to the downside right here. So I think more likely than not, we're going to come back up here and fill out at least the majority of this gap. Does it happen right away? I don't know. I think more likely than not, though, we can get a nice buy off this area. I think a beautiful trade setup will likely present itself in the near future. We may not get this complete gap fill back to the upside. We could get some bad news and maybe Snap just keeps selling off. But there's definitely a trade setup to be had. I mean, 39% to the upside, like 10% to the downside, 4-to-1 risk reward ratio. Whether it's juicy options or just a spot purchase on this little stonky stonk, there's definitely an argument to be made that this thing could do well. It's such a weird situation too. They technically had a earnings beat. They estimated negative 10 cents. They reported negative 5 cents. It was a 50% beat, and also had that like capitulation move, which is not surprising because like growth numbers and advertising revenues down, but still technically a beat. But now there's like arguments that the Apple App Store policies and advertising revenues down because the people aren't buying the advertising because they don't have the products to sell. There's a lot of arguments for why this is happening. And it's no surprise, obviously, with this little gap breakaway right here. We do still have this massive gap way back here at like $28. I don't think we just go straight down there, though. I definitely think we're going to find some support here, see a round back up, get a nice little scalpy scalp, and then we'll see continuation. But again, massive volume from a technical breakdown below the 200 exponential and simple. Technically entered into a bear market, and now we're seeing a higher level of volume than we have seen anywhere recently. Not the type of stuff you want to see if you are bullish on Snap. And maybe this is, people got afraid that the government was going to come after them for their premium Snap accounts. They were going to come after all their like fans, their fans for paid memberships of their spicy content. And, now that that's out of the new Dems bill, maybe Snap just goes parabolic because it's like, yes, I'm not going to get in trouble for my OnlyFans Snapchat account, premium Snap, my whatever. And you guys know how I feel about all that, OnlyFans and Snapchat and everything. People are like, we can't figure out where all the service workers are at. Well, they're all trading stocks and cryptos and selling naked pictures of themselves to the people that are trading stocks and cryptos. It's like, the snake eating itself, all right? None of the guys are at work because they're all trading stocks and cryptos. Some of the girls are doing the same thing. And none of the girls are at work because they're all selling pictures of their feet and other, body parts and orifices. And some of the guys are doing the same thing. And, you wonder why all these people aren't going back to work. Eventually the elites are going to get mad and they're going to say, back to work, slaves. And they're just going to crash all this so that, all the money goes away, all the quote unquote wealth and investments go away. And then the slaves go back to work because somebody's got to build the pyramids, guys. Let's be real. And it's not going to be old Billy Gates and Jack Dorsey. Elon might build a couple things, though. And I do respect Elon Musk. I bust his chops, but, hey, let's be real here. He's definitely at least building things and doing stuff. And some of his promises are true. Apple, still looks okay. I mean, I know people want to get real down on Apple and say it's going to zero and whatnot, but I think it looks all right. Definitely looks like it wants to roll over a little bit here. 200 exponential looks like it's about to cross back over the 200 simple. This thing had a pretty nice long sideways consolidation, broke out, and as far as I'm concerned now, it's just building like, a little support at this breakout level before it just goes higher. So, and then honestly, going into the holiday season, I think it'll do well. New MacBook coming out, another iPhone. Not sure what the difference is between the last iPhone. I think new colors maybe. I don't know. I think it'll do well. As long as they got the supplies, I think the demand's always going to be there for the old Apple. Amazon, again, kind of discussed this already. Just chopping around between the heart line and the top of the range. The longer we go sideways here, the less likely this head and shoulders pattern looks to play out. Basically, if we don't just drop down here soon, I don't think the head and shoulders will play out. I do think we'll continue to just range trade here. But overall, Amazon looks strong, but just been consolidating forever. When does this breakout happen? Does it happen for the holiday season? Do we get a breakdown after the holidays because this thing doesn't break out to the upside? This is going to really start looking like a giant Wyckoff distribution pattern if we don't see some kind of like technical breakout to the upside. It looks like it wants to break down here, honestly. I mean, it's hard to get bearish on Amazon, but I mean, hard sell signal left the bullish control zone, all red histograms, and just months sideways. I mean, but you could argue it's a bullish reset. Weekly indicator oscillators are just trending down while it basically just goes sideways to up. So while you could argue that there's some bearish divergence taking place, you could also argue that this is just a bullish reset before Amazon just keeps bursting to the upside. So I'm pretty much neutral on this thing as long as it's in the as long as it's just trading sideways like this. So Google, on the other hand, look at that thicky green candle. What? New all-time high close on the daily. Google Connect. You guys know how I feel about Google. I love Google. I love YouTube. I think everything they're doing is great. It's great that they're censoring people and deleting channels. It's great that they're telling us what to think and what to do. They put this platform out here. They let us use it. It's great. I mean, everything they're doing is fantastic. Wink, wink. Keep it up. Definitely don't ban me, bro. And I know you're listening. I just want to say, Google, you're fucking awesome. Keep it up. YouTube, you're fantastic. I definitely use your search engine browser, and definitely use your platform. And if I ever say anything that you don't like, just let me know, bro. And you tell me how to think, and I'll think it. Because obviously, I trust you, because you're good people, and good company. So, and the stock chart looks good. So continuation to the upside. Great job, Google. I don't even need to draw anything on this chart because it looks so juicy. Keep it up. Keep it up with the big green candles, old googly poogly, googly eyes. Netflix, so we got the move up here. We hit the measure move breakout of our range. We hit the 1.618 to the T. We hit our, why is this blue? You're supposed to be red, bro. Everybody knows the sell zone is red, the buy zone is green or blue. Get it together. Looks strong, still looks strong. I heard there's more squid coming out. They got the squid games, crushing it. I heard there's going to be calamari games next, maybe even octopus games. It's awesome. Looks fantastic. Netflix went sideways forever. Finally hit that winner. You throw enough shit at the wall, something's going to stick, baby. Netflix Connect. Yeah, looks good. Probably topped out, at least temporarily, though. All right. Let's do them cryptos. What? Oh, what's up, CW? Thank you, good sir, for your insights. Of course, my friend. Glad to share them. I know it's a little quiet in the chat today. I can never trust the concurrent viewer count as it is less than accurate. But damn, if anyone can hear me right now, let me know. Is anyone in the chat? Can you smash up the like button? Can you subscribe? Can you share it with your friends? Can you share it with your dog? Can you create a account for your cat or dog? You know what? We don't even like cats around here, all right? We're all about them Shibu Inus. We're all about them dogs. F a cat, all right? I do like that kitty, though, if you know what I'm saying. And I know you do. Bitcoin BTC1, that old futures chart, all-time highs, seen a little sell-off, retesting our breakout as support. We do see a hard sell signal. We do see a bunch of red histograms. Not looking great, but still looking okay. Weekly connect. Okay, so basically just a double top on the weekly. With this close here, a rejection candle, and then now bearish continuation. Not great. Still, again, okay. We are seeing some bearish weekly divergence confirming or just about confirming as we have a high here and a much lower high here, and we're not able to maintain the bullish control zone potentially, and then also a much lower high on the histograms as well. Potentially a rejection slightly above the slope line on the TJD TDMACD, but still okay for now. But definitely not the continuation and strength that you want to or would expect to see with the breakout of all-time highs. And here on the monthly, once again, on the futures chart, looking very much like a double top. I would very much like to see the monthly close in the next 1 day and 19 hours above this level. Otherwise, it's going to look like a double top potential rejection. But maybe we just turn it into an ascending triangle and we just go to new all-time highs soon. And, you know, we move to the Citadel. We get the golden Citadel, Peter ship, spaceship, the Tesla Mars bot, you know, all that good stuff. The SHIB, I'm a SHIBillionaire now. It's official. Bitcoin. Yeah. Regular chart. I mean, it looks like a bullish reset on the daily here. We trended all the way back down to the bottom on the Stokes, the majority of the way back down. Well, halfway down on the RSI, and a good part of the way down on the MACD, and price action has really not sold off that much. So, you know, we're at basically a key resistance. Are we going to hold it as support and see continuation to the upside? Probably. I don't want to get like overly bearish on this chart or anything, but not what you want to see typically after a breakout. Could start looking a little bit like a shorter term head and shoulders, but even a breakdown to like 52,000 going to look like a buying opportunity temporarily, at least for now. And if we look at the Bitstamp chart, we have the 200 exponential back above the 200 simple. Somehow the 200 simple has lost the slope again. We're still well above it, so as long as we just stay above 45,000, it's going to look bullish. Could we get a retest that low? It's possible. I think 52,000 is probably the area to pay attention to. We did close our daily below the 21. The 8 is obviously coming back down and fast. Hard sell signal coming out of the bullish control zone, bunch of red histograms. I mean, it's no secret that, you know, Bitcoin is looking a little weak here at this area, but it's looking strong overall. It's just showing a little short-term weakness. But we do have to be careful of a potential double top scenario. Oops, not bad. That's my scenario. Yeah, I mean, we got a higher high on the weekly close here on spot market, but, you know, that's just the crypto cult trying to, you know, trying to paint the picture that they want, not the picture that they actually deserve. It's manipulation. And monthly doing the same thing again. You know, got to be careful for that double top on the monthly. But again, no reason to get overly bearish. We are above the 200 exponential and simple. 200 exponential is crossing above the 200 simple. So if anything, I would expect a short to medium term pullback before continuation. Wink, wink, trade group. Ethereum. Same thing. Nobody really cares about Ethereum anymore. There's too many other shitcoins that are just cooler and cheaper that people would rather have. So, Ethereum, Is Ethereum just some old boomer coin? Are Biddy and Ether just going off into the sunset, all boomered up? And now the boomers are getting into it, so the cool kids are getting into the SHIBs and the polygons, the old Matics, the polka dots, the Solanas. It's like, oh man, I don't want a Facebook. My mom's on Facebook. I'm gonna go to Snapchat or, you know, Instagram or whatever. And then once all the boomers are on that, we're gonna go to something new. You know, I guess so. Probably, probably. Ethereum looks mediocre at best. ETH to Bitcoin chart, just range bound. We're in the middle of the range right now. I have no true bias here. 200 simple above 200 exponential. Bullish control zone. Histogram above the slope line. In the middle of the area. I mean, we could just as easily go to the top or the bottom right now. Looks fairly neutral. Market cap looking like a weekly bearish engulfing candle. Not great. Not what I like to see. Doesn't have to be that way. But again, seeing that bearish divergence develop here. We're hanging on to the bullish control zone for now, but we do not want to see this thing roll over and break back down into the neutral zone. Again, bearish divergence between the histograms here. We're above the slope line. The slope line is blue. We are seeing green weekly histograms, but not what you want to see on a technical breakout. Can SHIB do it by itself? It was up like, 75% today, while everything else was like down double digits in the crypto space. So maybe we just all, Reddit it up and just jump into SHIB with everything. We go all in on the worst crypto with the worst technicals and the largest circulating supply in existence. And we just stick it to the man. I mean, that's what we're doing now. That is what we're doing. But will it work? Well, it's working so far. It's working right up until it doesn't. Although Coinbase, once again, proved itself to be a total piece of shit. $60 billion valuation and can't even do the one job that it has during a pump, as it was crashed down today again, and there was extreme problems. Yep, Coinbase is a piece of shit and should probably go to zero, or at least put some money into their infrastructure. But I mean, who's to say that they're not doing it on purpose? I mean, conspiracytheory.com. Bitcoin dominance, looking like that double bottom, pushed up here, could not hold above the 21. Consolidates here long enough. I think it bursts to the upside. Strangely enough, we did see the 200 simple flip back to blue here. Still well below 200 exponential and simple, but hard buy signal off the bullish divergence. Histogram is above the slope line and green. I do think Bitcoin dominance probably bursts up here. Again, do we know, is that because Bitcoin is breaking out to the upside on its target to 72 or 100,000? Or is it because, SHIB and all the rest of the shitcoins are just dumping and Bitcoin's holding strong? I don't know. Can't tell for sure right now. But SHIB and ASTI, obviously doing some work. Crypto connecting it up. Absolutely parabolic. Looks great. Obviously, 821 cross back here. Started going parabolic at 0.00013. And now we are at 0.00083. So, has gone absolutely parabolic. We did a little math here, and I think this thing's going up an average of like 2% per hour for like the last couple weeks. So, I mean, look, if you can't get those yields from the bonds, the next safest bet, the next best solid investment based on strong technicals and fundamentals is obviously an investment in SHIB. And if you don't get the pure velocity and amazingness of this, we can just look at what's taking place here. The Coinbase one is actually better because it's basically just like went parabolic up here and then sold back off the whole entire wick, and now it's going absolutely parabolic again. So yeah, strong, I would say neutral to strong weekly candle. The monthly candle is, yeah, I'd say bullish. I'd say neutral to bullish monthly candle. Yeah, it's not bad. I mean, if you invested in SHIB at the beginning of this month, you are currently up 1,000%. So not bad. Not bad. It is literally the apex predator of the crypto space. It's eating Michael Saylor's fucking lunch. It's destroying all the cryptos. It's eating all the boomers. And it's definitely not a total shitcoin, meme coin with 400 trillion crypto circulating supply. It's actually like 390 something trillion. So everything wrong with our current environment is basically summed up perfectly with SHIB. But that does not mean that we are not exploiting all the suckers and taking that money. So, yep, SHIB looking good. Keep it up, Shiba Inu coin, because you're good at what you do. And definitely not a meme coin. So, I mean, I haven't looked at AMC or GME, but I'm guessing that probably people are jumping ship onto the SHIB train. Solana put in a new all-time high. Sold back off. What about 20% from that high? You know, from peak to trough. Yeah, about 19%. Definitely putting in some bearish divergence. Is the Solana hype train over? Is SHIB the new Solana? Maybe. Polkadot, selling off from that $46 range, down like 15% from the high here. Definitely looking like it's topping out, potentially ready to sell back off here. Retesting the previous stop as support for now, but below the 821. You want to see this level hold. Definitely want to see this level hold. Don't want to see it back down below 40. If it does go below 40, we have a strong support back here. There's decent, it stair steps down. We got to wait and see, but not looking great. Matic, been having some nice little runs up here as well. Was able to get that close above the previous high right here. Almost done playing out our scenario. The 786 up here at $2.13. Probably has a little resistance at $2. Just nice round number. But I think all these crypto meme coins have been overshooting. And again, Matic has a strong support group or Polygon or whatever. So not unrealistic to think it makes it to 210 after that, 250 roughly, and then probably takes out its previous all-time high, $3, or goes up to $3. Looking good, strong. One of the few that was crushing today or yesterday, however you want to look at it. Chainlink, back on top of the 200 exponential and simple, not really doing anything, still just range bound. Yeah, I mean, it's like I've been saying forever, until it gets above like 34.75, it's just doing nothing, just going sideways, doing nothing. Uniswap could not break above the neckline to potentially get a little head and shoulders break. Again, just range bound below that neckline support or resistance at 618 and the 0.5 and also the 200 exponential down here. Does not look good until it breaks above this level. Does not look good. Just another dead crypto, another meme crypto gone bad. And apparently whatever just charted. Oh, okay. Nervous Network looks okay above the 200 exponential and simple. Chopping sideways here. As long as it holds this level, it probably sees some more continuation to the upside. Still just range bound at the heart line at a key Fibonacci level. Yeah, I mean, it's just trading sideways. It's at the middle of the channel right now, holding a key fib level. I think it's probably going to see a retest of like 23.5 to 27 cents, but the real buying area or interest would be probably down here at about 15. Yeah, and when I say cents, when I say 23 cents, I mean 2.3 cents. When I say 15, I mean 1.5. But you know what I mean. You guys know. FTT. Holding support at the previous all-time high for now. 200 exponential getting ready to cross above the 200 simple. It is below the 8 and 21. Looks like it wants to chop around sideways. 2 down, but overall pretty bullish. XRP. Is this still a thing? Holding on to the $1 area yet? I mean, if you're on the XRP cult, I mean, why not just give up on XRP and just join like the SHIB cult? Why not get into the new cool kids cult? I mean, why are you in this loser cult? where every day just one more person drinks the Kool-Aid and self-terminates. Yeah, XRP is by far the trashiest trash of trash. Only crypto that's worse than that are the ones that completely went away because there were scams or just like made bad decisions. And Dash also. And Dash. Dash is pretty shitty too. But yeah, XRP, wow, you suck. You are the suckiest of sucks to ever suck. It is technically holding on to the 200 exponential, so that is good. Potentially could be going to new all-time highs, but I doubt it. XRP is actually just trash. So, yep. Unsubscribe, XR penises. Basic attention token broke down, could not get above the 200 exponential. Probably going to sweep the lows back here. Definitely trying to put in, 58 cents next. Looks bad. Basic attention token looks bad. About to drop off the top 100 page. After that, straight to zero. Dogecoin. Somebody's eating your lunch, Dogecoin. It looks just like you, but a little bit cooler. Okay? And its name is Shibanasty. Doge is looking like a pile of Doge, if you know what I'm saying right now. And it smells like one too. Not good, Doge. The new SHIB is in town. It's here. And it's eating your lunch. The apex predator of Shiba Inus. And it's not Dogecoin. It might be that other one that you mentioned. I can't remember which one. I can't even remember the names. But it's named after Elon Musk's dog. Obviously, strong fundamentals. Definitely not a meme coin that's just named after Elon Musk's Doge or Baby Doge or whatever the new shit coin will be. But whatever. Definitely not a bubble. There's no bubbles to be seen here, guys. These are good investments, not financial advice. I'm not your financial advisor. You will probably lose all your money. But before then, you're going to look like a fucking genius. Basically, the stupider you are, and the worse the thing is that you put your money in, the smarter you look, and the better your quote-unquote parentheses investments are doing right now. But that's good. That's good. That's definitely not a bubble, and it is for sure sustainable for a long period of time. Cardano. Wow, Charles. Wow, Chucky. Still above the 200 exponential and simple. Breaking down from key support. Uh-oh. Uh-oh. Cardinal beads looking like shit. Smelling gross too. Somebody get them some alcohol so they can clean them things off. Alright? And definitely don't put that in your mouth. Ew, gross. Yeah. But you are staking. If you're staking your Cardano, you should be making 5 to 10%. Oh, but you did lose 10% today. So yeah, I guess maybe that's not good. If you make 10%, if you get paid 10% to stake your Cardano annually, but you lose 10% in one day, is that a good investment? I'll check with my financial advisor and I'll get back to you on that one. FTM still looks very strong. I got up above the 1.618, sold off, and now seeing continuation. So next target to the upside. We got some other fibs in there, 2.0, 2.236, 2.318, 2.572, whatever random numbers. But, I made all those up. The only one that matters now is the 2.618 up here at $6. It's another 40% move to the upside. Does it get there? Looks extremely strong. Looks literally better than most cryptos, with the exception of Cardano. No. XRP. No. SHIB. That's it. SHIB is the only one so far we looked at that looks better. Yep, that's the one. Coinbase at the top of our ascending broadening wedge. Apparently no one really cares about how Coinbase functions or if they have outages or anything like that. They just want to speculate on trash bag Coinbase. Looks like it's topping out. Looks like it wants to roll over. Bullish control zone rolling over at resistance. Typically, we'll just come back down and sweep the lows again. So, see you at 235 Coinbase. Not sure what your news is going to be to get you there, but I will see you soon. Coinbase. Overvalued. Doing the thing it's supposed to do worse than literally any other exchange, but valued higher. Coinbase. So Robinhood got the breakdown as expected, as predicted, as discussed. A little gappy gap to the downside based on earnings. They're saying now, like SHIB ran up because they said they were going to list SHIB, and now they're saying they're not going to list SHIB because they don't want to list meme coins and they want to protect their investors. So I imagine they're probably worried about the SEC or some other regulatory body. And while they are already under the microscope, they don't want to just do any other stupid ass things. So, but that's okay. Yeah, I mean, probably a new low here real soon. Leaving that gap there is not good. Obviously, this is not going to happen. Not finding the support that it was hoping for. You guys know how I feel about Robinhood. I think it's a total trash bag, piece of shit exchange. If they did you dirty, why would you want to invest in them? Is there going to be a scalp in the near future? Do I hate Robinhood as much as I hate Facebook? No, I would scalp this if the opportunity presented itself. But let's see what happens here, because we may start seeing Fibonacci extensions to the downside and new lows on the Robinhood. Robinhood steals from the poor and gives to the rich. Wait a minute, is that right? Is that his slogan? Vlad, you fucker. MicroStrategy. Underperforming Bitcoin. Still well off of its highs. It's trash. Michael Saylor is the apex predator of douchebags on the internet. SHIB is eating your lunch, old Mikey Saylor. Yep, should have invested in SHIB. I mean, according to Michael Saylor and his arguments for Bitcoin, and outperforming all of their assets, technically SHIB is the apex predator of the crypto world, and it's eating your lunch. So maybe time to sell all your Bitcoin and go in on SHIB and ASTI. Bed Bath & Beyond, breaking down new lows as expected. I discussed this already multiple times about how terrible Bed Bath & Beyond looks as a company. It had this massive meme stock run up, didn't even put in a new all-time high, and the balance sheet looks so terrible. They should have done what everybody else did and issued more stock up here and then paid down some of their debts. Massive gap. Does it come up here and fill the gap? Probably eventually. Buy, sell, buy, bottom of the range, bunch of green histograms as it makes new lows. Typically, this is what you want to see. Another big red candle, and that will be the bottom. But again, there's just a million other things that are better trades than this. While that was nice potential setup, like I said, I'm not interested in it. GameStop looks weak, barely hanging on to 200 exponential and simple. You better load the dishwasher because your mama's coming for you, Game Stonkers. You know what? Just sell all your Game Stonk and get into SHIB. All right? I know you want to diamond hands it up, but let's be real. Okay, Game Stonkers? It's dead. It's garbage. It's not good. Invest in something with strong fundamentals and technicals, like Shiba Inu coin. Duh, bro. I mean, how many times have I told you? If you're going to buy trash bag shit that's useless, buy trash bag shit that's useless, that's making all-time highs and has momentum, like SHIB. AMC, looking weak, apes. Come on, apey poos. Get it together, you primates. Looks bad. Looks like it wants to retest the lows in the 200 exponential and simple. The first touch of the 200 exponential and simple looks inevitable at this point in time. $27 to $30, looking very, very likely. Just hope it's not a gape for the apes, but probably is going to be. Sorry, apes. Meh. Diamond hands this, losers. Big surprise. Newegg is breaking down. It is actually trash. The chart is trash. There's no cult members. The financials and actual technicals all just look absolutely terrible. But it is an actual business where you can buy things. But obviously very, very overvalued. This squeeze up here, and now we have slowly but surely just ground down the entire squeeze, as predicted, as expected, as discussed many, many times. We are almost down at our target. One could argue that we are nipping the tip of the potential downside target. I think 1075 is reasonable, so maybe loses another $1, and then we see a nice move back to the upside. But without a cult, Newegg does not have the same squeeze potential dead cat bounce that the others do. So we saw that nice little bounce off of our entry here. Unfortunately, almost no follow through. Technically in a bear market on DraftKings. Did not see the full move play out. Is there still potential for it? Sure. Definitely still potential, but does not look good. Looks okay, but not good. Yeah, I mean, a lot of this stuff's in a bear market. But we should see some kind of pop gap close to the upside. I think I'm going to call it there and skip our golds and silvers and stuff. I did post a chart in the group and make a couple comments about miners and stuff for you guys out there. I will make sure to hit gold and silver and all that stuff next time, but I'm winding down here. I don't feel like running through all these. But basic, well, we can look at them really quick. Gold at an inflection point with the 200 exponential and resistance. Silver, again, at an inflection point, had a technical breakout of resistance. Gold-silver ratio, basically just consolidating after a rejection off the 200 exponential as expected. Probably sees continuation to the upside, but could go either way. Platinum, initial trade setup played out, fell short of the big one. Could easily come down here, find support and continuation, but looking very weak, and especially on longer time frames, but now on shorter time frames as well. First Majestic got a nice little push up, rejection off the 200 exponential, consolidating for now. I expect it to it could easily get up here to $15, but more likely than not, probably just going to be coming back down to sweep the lows. Same with Silver Juniors, aka Majestic and Friends. USAS had a nice little performance so far, but still looking very pathetic. Finally got the 821 cross. Will this trade setup play out and 93% move to the upside? Probably not, but still looks okay. Very much depending on what the dollar does, very much depending on what spot underlying gold and silver do. Tilray and pot stocks look terrible, coming back down here to the lows, probably getting ready to put in new lows. ACB slightly less bad, but still bad. Canopy Growth Corporation, CGC, once again outperforming everything to the downside, aka the shittiest, the worst pot stock. URA, again, looking like it's topping out at a key level here. Finally, our trade setup is completing, playing out, and we have captured a nice, beautiful 77% to the upside. Matter of fact, I've captured much more than that because I got in this far earlier than this trade setup, but definitely looking like it could potentially be topping out with some bearish divergence. And I know SPUT and SPROT and all that stuff, but go out there and UEC, same thing. CCJ, same thing. URNM, same thing. But if you listen to what they've been saying, and essentially, they've been buying a ton of uranium and everything, but not saying that they don't expect it to put in new lows still. So just keep that in mind. We have seen a nice parabolic move in uranium, and again, this is a long game play. Don't be Cathie Wood and, be behind the curve. If you wanted to be super bullish on uranium, it should have been a while ago. If you want to be super bearish on uranium, now's probably not the time. But short term, is it okay to be a little bearish? But long term, extremely bullish? That's my scope of things. Copper, same thing. Looks very much like it is topping out, at least on the short term, although I'm very bullish on it long term. Lithium, putting in a LIT, putting in some new highs here. Still very bullish on this. Short to medium term, it could go either way. Hydrogen, same thing as lithium. Lobster futures, really starting to look like that head and shoulders is going to play out here. We've got that right shoulder grinding out and looking like it wants to roll over here. Looking very tired. Rejection off the 200 exponential. 821 getting ready to cross back to the downside. Hard sell signal. Bunch of red histograms. Losing potentially the slope line on the TJD TDMACD. Right shoulder. Wait a minute. What is this going to do for housing prices? What is this going to do for new home starts? What is this going to do for the overall, economy? as, you know, what is the housing market? Sticks and bricks. So if the sticks are getting cheaper, the bricks are getting cheaper, the house is going to get cheaper. Could go either way. Caterpillar got the retest of the 200 exponential, now officially in the bear market, as the 200 simple and 200 exponential both are sloped to the downside, and a clear rejection. Earnings coming up here on the, what is that, tomorrow? Yeah, earnings tomorrow, and the estimate is $2.20. We will see what happens with that, but based on this chart right now, if I just had to guess, I would say that it's probably going to be a miss. Probably going to be a miss. I don't know, though. They could probably doctor the numbers. They never miss. But I don't know. We'll see. We will see. Deer, slightly more bullish, but again, rejected off 200 simple. Hanging on to a 200 exponential for now. Looks a little more bullish, but probably going to do something similar. AM Antero Midstream Corporation, that H2O play, looks very toppy here. Looks like it has potentially topped out, broke out to a new cycle high. Looks like it wants to come down here to like 1050. We'll see if it holds support. Potential for a re-entry. Cemex, here's our foundations, our cement, our bricks of the sticks, aka another key component in building, industrial, and also housing as well. Not looking great. Below 200 exponential, getting rejected. 200 simple, still sloped to the upside, but looking like we are going to see some serious downside potential as expected. Cleveland Cliffs, retesting the highs. Nice little bounce off 200 exponential and simple. Blue slope line near the bullish control zone. Could go either way. Looks like it wants to put in a little bit of a double top right here. Has taken out half of the candle prior to it, but this is a little more of a doji. So a little less bearish than what we're seeing on something like Tesla. Could go either way. You're like, bearish Tesla, you're dumb. Tesla's not bearish, idiot. Don't be mean. I'll stick Elon on you. Ford, same thing, double topping right here. I don't know, maybe Hertz comes out and says they're going to buy some Fords, and then Ford's goes parabolic too. Looks toppy. Looks toppy. GM looks much worse, but same thing. Hasbro, nice little bounce. Again, though, just up to the 200 exponential and simple. Does this area hold? Probably not, but I mean, I just expect this to continue range trading. I do think we're going to get down here to like 82. It's just a matter of when. Earnings beat by 27 cents, as reported, $1.96, estimate $1.69, 16% beat. So saw a nice little continuation off that. Left a little itty bitty gap behind, but looks good overall. Works breaking down, still looks very weak here. Any sphere breaking down off of our key resistance. Looks like it is playing out. Really want to see this come down here and put in that right shoulder, and I'll probably take another scalp. Probably a nice size position if we do get down to like that 250 range, as this thing could easily just burst to the upside. Could find support here and put in like a weak right shoulder, which would be strong for the pattern should it play out. Oh, hang on, let me just clear my throat. Excuse me. Walmart had a nice little pushback up here, retesting the highs, back above 200 exponential and simple. 200 exponential is crossed back over, flipping the slope line back up here. Having trouble getting above this range here. Oh, sorry, I don't know why I didn't make these big, guys. Damn, I didn't even notice. Should have just quit while I was ahead. Yeah, sorry. On my screen, it's big, but on the actual screen, on what you guys are seeing, it's not that big because it's just a quarter of your screen. But my screen, my actual monitor is gigantic, so even when it's a quarter screen, it's still really big. That's what she said anyway. WMC, Western, blah, 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 blah. This, again, decent trade setup. I'm not taking it. Potential for the retest, but there's just so many other trades. I mean, why would you ever have took this when we had sweet trades like UPS? That was like the same trade setup, with a actual like good company behind it that looked promising. Exactly my point. Long the winners, short the losers. Bet on the horse that's got a high probability of winning and a good percentage payout, not the one that is consistently underperforming with an equal percentage payout, but much less likely outcome. MGM still looks good, holding support for now. A break of this level, probably just going to come back down to 45. So is this a good place to take profits? That's up to you. But definitely looking a little bit toppy for now. No bearish divergence. Definitely strong for the casino space. So I see probably continuation to the upside over time. Mark, M-A-R-K, Remark Holdings. Can't remember who or why someone asked me to look at this, but obviously had a giant gap up to like 660 something and then sold off the entire thing. It is now above the 200 exponential on simple. This was the area we wanted to see for the retest. What does it do from here? Man, I mean, this is a tough one because that burst was from 75 cents and it like 10x'd in a couple days. So you could argue at $2, it looks good, but not if it goes back down to 79 cents. So, I mean, I wouldn't touch this one with a 10-foot pole. But, I mean, if you just, like, really wanted to gamble, I mean, what are you looking for? You know, some kind of, like, support down here. I mean, I don't know. This is a rough one. That amount of volatility, I just wouldn't want to touch this. You know, you could argue we got some kind of like channel situation going on here. You know, and this is the 200 and also kind of like the heart line of the channel. So but you're like right smack dab in the middle. So does it lose 50%? Or does it go back and go to the bottom of the channel? Or does it gain, you know, 200% and go back to the top of the range? I mean, your guess is as good as mine, but I mean, what's the trade setup? It's pretty much like all or nothing. Go for something like that. I mean, this like one of the ones you got to play with options because you're not going to take a 50% stop loss. But for 229% potential back to the top of the range, 4.7 risk reward ratio. I mean, is it worth taking a stab at? I mean, sure. It's like Russian roulette. You know what I mean? Seems like a good idea until it goes bang. But with that, we're going to call it for today, guys. Sorry about that little mini screen on the commodities, but it was sort of a bonus as I was going to just jet and not do them. Anyway, just remember, please protect your principal, protect your capital, you know, make wise decisions, look at actual investments. And while it's fun to trade shitcoins and meme stocks and all that stuff, just remember that as fast as these things go up, they can go down. So make sure that you are taking your profits along the way, evaluating your risk as well as reward, but trading responsibly, protecting your principal, protecting your capital, and looking for actual sound investments or scalping shitcoins or, you know, meme stocks, not investing, quote unquote, in them. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Sorry for the short delay today. Welcome to our newest group member. Appreciate you. If you are interested in the TJD Master Indicator on stream, you can shoot me a message at cryptotrendtrader@gmail.com for entry into the group. It is a paid group, but for what you get, for what you spend, it is well worth it, in my opinion. We do have the still recent and very relevant 10 under 10 with a couple little bonus stocks in there. 10 stocks under $10 that have potential to 10, 20, or even 50x. That is a group member exclusive, as is the TJD Master Indicator. And, you know, obviously other trading chart setups and whatnot, as well as a new video that I'm working on right now. If you're interested in that, hit me up. If you're not subscribed, subscribe. If you didn't hit like, smash up the likey poo. You know, all that good stuff. Appreciate you guys. Appreciate the positivity. Share it with your friends. Help me get out there. I do not use social media, so I sacrifice quite a bit of growth for my own mental well-being, and it is, in my opinion, well worth the sacrifice. But sometimes it is a little frustrating, the lack of growth. But you know what? I'd rather have a small, awesome quality community than a big one full of trash bag, meme coin, negativity, etc. So, but it's easy for anyone to just be an investor on their own and make lots and lots of gains and gamble and be successful in a bull run. But the most important time to have all the knowledge and the strong foundation is when the bull run starts to break, when the bear market hits, and that is when all the important things that I teach, that we discuss and learn together are so important, because anyone seems like a genius in a bull run, but if you lose it all in the bear market doing reckless or unintelligent things, what's the point of getting rich on paper if you don't see and reap the rewards in real life? So with that, I'm going to let you guys go. I appreciate everybody today. I appreciate all the good stuff. All the other indicators and my personal charts are available for free in the description down below, so you can get everything but the TJD Master there. And if you want to just make a contribution, obviously for the work that I put in, feel free to do that as well. But it is not necessary for all the people that do support myself, the channel, and obviously the trade members in the group. I personally, specifically, am grateful as you guys keep me motivated and keep me doing this. Such a good community and some awesome peeps that I definitely share some mad gains and even more laughs as well. So take it easy, guys. Everybody have a good one. Enjoy this video, and I will catch you on the flip side. See you Sunday, and trade group, expect that video in the next couple of days. So, Crypto Trend Trader, and I'm out of here.